broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Tuesday morning, beginning of the week still, first half of the week. We are coming to you as always from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me my colleague Sonia and Nigel. Guys, hi, morning.
Hi, good morning Prashant, good morning Nigel. And the going has been good. The Nifty has been hanging around that 21,000 mark. Doesn't look so bad across global markets as well.
It doesn't, right? And things are looking quite okay. Although I think there is a bit of a mishap with one stock overnight, which is Oracle.
Well, that's right. And out here, I think we'll have emphasis out here. So tech will be a little under pressure. So high amount of dependence, I think, on the banks and the financials. So let's see how it goes.
Yeah. Absolutely. Well, let's just kick it off with what you need to know as we begin another trading session. Yesterday was quiet, at least on the frontline indices. The market still, by the way, managed to move a little up, 20-25 points or so. But as we began, same time yesterday by saying that the momentum is, of course, starting to slow a little bit. And that's to be expected. You can't go, with the same ferocity that like we had on Monday, Tuesday, Wednesday last week. It will, of course, slow down a little bit, but the trajectory has been up. I think that has been extremely clear. So the handover from overnight, Wall Street has been positive. The Nasdaq ended up. The S&P was up about 0.4% or so. And by the way, all large 7 mega caps, so as to speak, the Apples and the Alphabets of the world, they all ended down. But the Nasdaq was still higher because the broader outside of the mega cap, the broader market did much better in the US. So, we'll talk more about that and what that means. You had some data as well. Before that, the other indicators, the 10-year was absolutely unchanged, 4.23. The dollar index at about 104. Nothing very much to write home about. Almost unchanged levels from where we were yesterday morning. The New York Fed one-year inflation expectations has softened. It's softened to the lowest since April of 2021, and I think that is significant. So on Friday, when the jobs number came in hot, and that kind of raised worries that maybe, cuts next year, Fed rate cuts next year will be pushed out. You had the Michigan, inflation expectations, which softened. And now, overnight, you've got one more data point, which kind of shows that. But in any case, we get the CPI, the headline CPI, the core CPI, where the focus is going to be tonight out there in the US. And then, of course, tomorrow we'll get the Fed decision. Tomorrow evening, which means that Thursday morning is when we'll be we'll know what the Fed has said. There's a Powell press conference, etc. as well. Will he push back on the 130 basis points of rate cuts, which the market is already pricing in 2024? I think that's going to be the one thing. I mean, if you had to just pick one thing, the markets are going to be waiting and watching out for. So these are pretty large events. The market has done very, very well, right? I mean, coming up to this particular point, extremely well, exceptionally well. And you're kind of getting into some important cues today and tomorrow and actually on Thursday as well. So maybe, just maybe, I mean, things are going to be on kind of a holding pattern zone till we get some of this stuff out of the way. Now, Oracle is down 10% overnight after hours. They reported numbers. There's some slowdown in the cloud business. And, of course, there is the Infosys news flow as well. The CFO has stepped down. So IT stocks, perhaps, you shouldn't look for outperformance there. How much they kind of react to this, we will see. Oil prices, they're around 76. There's not very much there. And later today, in the middle of the day, you get the industrial production numbers and the consumer price inflation numbers, India numbers. And I think the CPI is more important. The IIP number is more backward-looking. Now, on the Nifty, the levels don't change very much. We put these out yesterday as well. On the upside, the Nifty's got 21,050 and 21,100 as levels, which it needs to get to. And it will perhaps get to. It's a matter of time. On the way down, the lows that we've seen over the last couple of days has been at about 20,850, and that's where one should draw supports. And if that doesn't break and that doesn't give you a clear signal of a reversal, even if a minor pullback, I think you're basically headed up. On the Bank Nifty, we need to get a close above the medium-term resistance, above the 47,780 level. Again, the rising medium-term trend line that we've put out, it's kind of moving up just a tad bit. And a negative close here on the Nifty Bank will give you the first indication that maybe, you perhaps are in for a bit of a minor pullback. So watch out for a daily close on the downside, which we've not had on the Bank Nifty, even though yesterday was absolutely flat. The market did give up a lot of the gains through the course of the day on the banks. PSU banks, of course, have been the go-to sector, and very strong gains continue. The GIFT Nifty will come up on your screen, and I think that's indicating a 55, 56 odd point higher start. What do you do after a gap up like that? I think it's possible that some of those gains fade out right after the open, and kind of and as we go into the session, into that important data point that is the US CPI and the Fed decision as well. So perhaps expect more quieter kind of markets like the one we had yesterday as well. Sonia.
Oh, absolutely. This is a bull market. No two ways about that, right? The Nifty is sort of building onto its gains. It's latching onto every good news and, piling up those gains, as we've been saying. But I would watch out for the tech stocks very closely today. Two pieces of news, of course, as we told you. One is Oracle, missed their estimates. The company missed their revenue estimates. But on Infosys, I would be interested to see what happens, because there have been senior level exits across, the technology space. And in Infi, the CFO has resigned. There is, of course, a very strong person who has stepped up in his place, who's had over 18 years of experience in the business. But will Infi be a buying opportunity? That would be interesting, because let's not forget, Infi had a strong set of numbers as well. In the quarter gone by, its Q2 numbers were the strongest amongst its peers. So will the street use this as a buying opportunity? That would be an interesting thing to see. A lot of macro data as well, IIP for October, CPI for November. But I'm also looking at the numbers very closely in terms of the FI and DI participation. So FIs continue to buy in the cash markets. 1,260 crores is what they bought yesterday. And all eyes will now be on the FOMC meeting. The final meeting of 2023 begins today. There's no movement on rates expected, but any indications of perhaps, easing of the rate cycle is something that will be very closely watched. The announcement is tomorrow. And easing of the rate cycle is something that the people are looking at in our own markets as well. That's why PSU banks have been doing well. Real estate has been picking up. So these are a couple of themes that I'm looking out for. In fact, the Nifty PSU bank ended at a record high yesterday. So that's something that perhaps can build on to its gains today as well. Now, let's not forget that the global markets have been very strong. The Dow hit its highest level in 2 years. It's been up for 3 straight days. So in that context, perhaps you could see some more weight being put on for our own markets. And there is a gap up that we're expecting this morning, a strong bull run. But these couple of spaces is what I'm looking at, the PSU banking space, the real estate space, because if there's any talks of a rate cuts come through, either from the US or from the RBI, the street has already started to price that in.
Well, that's right. Sonia, for the next couple of sessions, I think maybe the Nifty could consolidate a little bit, because you want that big central bank event to get out of the way and then continue your upward course, of that around the 21,500 odd. The Nifty Financial Services Index, though, that's the one that plays out the weekly expiry, so keep an eye out on that one. And in terms of flows, yes, the institutions were net buyers because the FI buying outweighed the DI selling. But yesterday, the FI gross flows, the total flows participation actually was 30% lower in comparison to the 10-day average. So just keep an eye out on that. It appears, yesterday their participation was much, much lower. Now, the Nifty ended high yesterday, and normally you see the VIX cool off. But ahead of a big event, you're seeing that the VIX as well is moving up. So that's one point I just want to put on the table. Infosys, why is that important for both the Nifty as well as the Nifty IT index? Because on the Nifty, it's the 4th largest weightage. It has close to around 6% weight. That'll be a little bit under the weather, so that's what will drag, the Nifty a little bit low. And also, it could have a rub-off on the other IT stocks as well. The Nifty IT index itself, more than 27%, it's the highest weighted stock out there. So that will be as well under some pressure. So all eyes will be on the banking and the financial names to take us beyond the finishing line. What did the FIs do yesterday? After a while, they added a few more shots in comparison to long positions, so they continue to remain net long, with close to around 57% of their positions on the long side. On the Nifty data, well, the options data, 2 strikes. Well, in terms of open interest out there, 21,000 call, close to around 90 lakh shares out there. 20,900 put, close to around 70 lakh shares out there. So just plugging in those numbers, the 21,100 level, that'll be a bit of a resistance zone. While on the downside, last week, quite a few times, you went around 20,800, and also tallying the 20,900 put, seeing fair bit of open interest build up with premium roughly around 50 rupees, you get your support level of around 20,850. The Nifty Financial Services Index has expired today. I was looking at, the options data. It's giving you a broad range, 21,000, 21,400, because the 21,400 call has the highest open interest on the upside. On the downside, the 21,000 put is well fairly active. The GIFT Nifty suggesting we start off in the green. That's good news, but you need to build on that. Maybe some money will be taken off the table at the start itself. You need to get past 21,100 to see a further up move.
Nigel, thanks for that. Before we go any further, let's quickly tell you what's lined up here in the first half hour of the show today. We get you updates from markets across the globe. Harold van der Linde of HSBC will join in to discuss the global setup. Our research team gets you CNBC-TV18's list of top stocks for the day. At about 8:30, we'll do a fundamental stock check with Amnish Agarwal of Prabhudas Lilladher, who's our guest on the program.
All right, let's kickstart with some views on the equities front. We have Mahesh Nandurkar of Jefferies, who says that India's 7% plus GDP growth is being driven by strong capex growth of 9.5% in the first half. Government strong capex growth of 34% in 2023 so far is sustainable, though through the FY24, as excess tax collection should be sufficient to fund pre-election social spending. He says their conviction on continued capex cycle stays. L&T, SBI, Macrotech, Godrej Properties, Ultratech, Thermax, Polycab, KEI, Kajaria, JSW Energy, Coal India are preferred plays according to them.
All right, well, let's get you some money market views as well. Abhishek Goenka of IFA Global says that the dollar is strengthened a bit post the solid US November jobs report. Focus will be on the tone of the Fed policy due tomorrow. He says the rupee continues to remain extremely stable against the dollar. Adds crude prices have softened comfortably to comfortable levels, and FPIs have poured in close to $3.6 billion in domestic equities in the first few sessions of December. Abhishek says the RBI, however, continues to mop up flows as reflected in its forex reserves, which have crossed $600 billion once again. He expects the currency to trade between 82.9 to 83.7 to a dollar over the medium term.
All right, and on the bonds, Ajay Magnolia of JM Financial says the bond yields hold steady in a narrow and tight range, and attention turns to the CPI data, which is projected to be closer to 6% levels due to persistent food inflation. He adds that the market also keenly awaits the Fed policy decision, with a focus on Powell's remarks about future interest rates. He expects the 10-year benchmark bond yield to trade in a range of 7.26 to 7.31% today.
Well, we have a lot of stock-specific action track for you. We get to that in just a bit in our special Top 10 segment. For the time being, we run you through the list. We look at Sun Pharma, Aster DM, Sterling & Wilson, Dixon Technologies, RVNL, Fed Bank Financial, JNK Bank, as well as Bandhana Spurti. All of them will be reacting to positive news flow overnight. On the flip side, you have Infosys as well as Mankind Pharma. Both of them will be under some pressure.
All right, Harold van der Linde is head of Asia Equity Strategy at HSBC. Harold, welcome back on the program. Thanks very much for your time. I mean, you've been talking to us about maybe in the very near term some relative outperformance in China versus India. But I mean, what a week and a half we've had, Harold, here in India. You know, last week was about 4% on the benchmark Nifty. The banks index went up almost 6%. This is after the state election results. What are your thoughts now? I mean, momentum-wise, relative outperformance-wise, India is right up there. I think the frame is frozen. Harold, can you hear me?
No,
I don't think he can. We'll kind of re-establish connection and go back to him in just a bit from now. You know, let's just quickly tell you the should we take a quick break here? Actually, let's just take a quick commercial break here. Harold should be back with us, and we'll have that quick conversation with him. Our list of top stocks to watch with the research team coming up as well. Stay with us.
Embarking on a quarter century of excellence.
Stock market, huh?
On a quarter century of excellence.
All right, it's a Tuesday morning. You're with us here on Bazaar Morning Call. Harold van der Linde is head of Asia Equity Strategy at HSBC. He's joining us now. Harold, we lost you there. Good morning, and thanks very much for being with us here on the program. You know, what a week India has had. The outperformance has only strengthened the grip that bulls have on this market has tightened, if anything. And most people are now calling for FIIs to return to this market in a big way. They're saying that many will prepone their decision with the political certainty, etc., very visible now. Your thoughts?
Yeah, no, I agree. I mean, we spoke about this a couple of weeks ago, right? We said, listen, we're going to be close to that peak in interest rates in the US. We'll see, of course, what comes out what the Fed is going to say over the next 24 hours or so. But you've seen a marked decline in bond yields. That's good for everything, to be honest. We've seen a rally in equities globally, in high yield bonds, in investment grade, you name it. In particular, tech has done very well. So that works out well. Now, when we spoke last time around, India was slagging a bit, but we said, listen, the overall earnings growth story in India is looking pretty good. So we're willing to stick with our kind of positive view on India. That's worked out well. The politics is probably not as big as an issue in India for an equity investor as it is in other parts of Asia. We've got a lot of elections coming up. Indonesia, for example, going to have a new president. So we don't know what's going to happen there. But there's definitely going to be a change of president because he's at the end of his term. So there's a bit more uncertainty there than, for example, relatively speaking, what is going on in India. So that means that India continues to look pretty good. Decent earnings growth is coming through. What is there not to like in that market?
Harold, hi, good morning. You've liked the Indian markets for a very long time now, so that's always a good thing. But I wanted your thoughts on the here and the now. We have some news flow on Infosys where the CFO has resigned. And of course, there's going to be a sentiment hit over there. But you've tracked this space very closely for a long time. Do senior level exits perturb you as a long-term investor in stocks like Infosys?
See, senior people move on, right? So that is just a fact of life. So you have to look at the underlying reasons. So in China, we've had companies where also senior management changed, and that meant a clear focus on the direction of the company. Now then, as an equity investor, you're going to say, well, am I happy with that? And what is going to happen? And this is not maybe always clear to me. Then it comes with risk. But if it's not really a change in say, the future prospects for the company and these sort of things, then it's just somebody else that is steering the wheel or is making some of the decisions. So that's the way I look at it. So it doesn't have to be necessarily bad. We all turn 60 at some point in time, 65, and decide to move on and do something else. So that's the way I look at it. It really depends on what's really happening with the company.
All right. Hi, Harold. Morning. Good to see you. And Harold, the next big event in the next 48 hours or so, we'll hear from the Fed, with regard to the decision. But I'm looking at the Fed rate futures. They are pricing in a 40% probability that we see rate cuts in the initial part of 2024. Are you in that camp?
No, we think that the rate cuts will come a little bit later into 2024. And I think if there's a risk to markets, it's exactly this, that the market is already anticipating quite substantial rate cuts coming through, and that we might get disappointed in that. That means that we have to recalibrate, the bond yields go up a little bit, and the equity space comes down a little bit again. But I just see that as a recalibration. I don't think that's a structural shift. So that means that, maybe we'll have some weakness on markets if we are correct in that. But it's not something that I'm overly worried about. I just see that as a near-term correction. The overriding term is that those interest rates will go down. It just depends on when that's going to happen into 2024. At least that is the market's assumption at the moment. But I think the market is probably getting ahead of itself a little bit in terms of the timing of this. It's probably going to be a little bit later than what the market is willing to really price in.
All right, we will let you go on that note. Thanks a lot for joining in. Appreciate your thoughts here. So that is Harold Vanderlyn with his view on the Indian markets. He's been liking the Indian markets for a very long time now, and he hasn't changed that view. And he says that senior level exits happen all the time with companies, so one shouldn't be too perturbed over there. But in fact, let's talk about that. Our research team is joining in now to help us with the list of top 10 stocks, and definitely all eyes are going to be on Infosys after the CFO resignation. Reema's here to give us the latest on that. Reema, good morning.
Hi, good morning. So Infosys CEO Nilanjan Roy has resigned. His last date with the company will be 31st March 2024. And the company has elevated the deputy CFO, who also looks at M&A, Jayesh Sangrajka, who will be the CFO from 1st of April 2024. This announcement came yesterday post-market ads, and we had the Infosys ADR react to the development, and the stock price there was down 2.8%. Morgan Stanley has written on Infosys, they say the resignation of the CFO was unexpected and could could weigh on sentiment for the stock in light of the past senior exit, although they expect the transition to be a smooth one. So CFO stepping down for Infosys has come in as a bit of a surprise and could weigh on the sentiment. Back to you.
All right, Rima, thanks a lot for that. Well, Ekta joins us to fill us in with a couple of pieces of news coming in on Sun Pharma and Aster DM. Morning, Ekta.
Morning. Well, I'll start with Sun Pharma, which is in focus because they are increasing their offer price for Taro, which is their US arm. The company is going to offer to buy out the outstanding shares of Taro at $43 per share versus $38 earlier. Remember, in May of this year, Sun had submitted a non-binding indication to increase stake to Taro to 100% in order to delist it, and the deal was valued at around $300 million. They hold around 78.48% stake in Taro. Now, Sun had also proposed a reverse triangular merger for delisting to form a wholly owned subsidiary in the form of an SPV and enter into a merger agreement with Taro. Remember, the stock has already, Taro has rallied around 38% from the time of the submission of the previous offer. In US trade, it was up marginally by around 0.11%. We could probably see a rub-off in the green for Sun Pharma, simply because if this goes through, they will have access to the cash on Taro's books, which is considered to be over $1 billion. Aster DM is in focus because they're looking to sell stake as per a Mint report in their India business now. PE firms such as KKR and others, as well as Care Hospitals, have submitted a non-binding bid. Remember, on 28th of November, Aster DM sold its Gulf business to Fajr Capital as well as promoters for a valuation of $1 billion. CNBC-TV18 has not verified this report independently.
All right, Ekta, thanks very much for that. Busy week for you. It's turning out to be with yesterday, Dr. Reddy's, and of course with all of this. Now, come back to you for more. But Mankind Pharma and Sterling and Wilson should be in focus. There are share sales in focus. Vivek has got more. Vivek, morning.
Well, good morning. That's right. So early morning today, watch out for Mankind Pharma. We are anticipating a large block deal in this particular name. Sources indicate that Capital Group as well as Chris Capital will be looking to pair stake via this particular block deal. 6.9% of the total equity is the base size of this particular block deal, whose term sheet we have access to. So the total upsize option is up to 7.9%. So almost 8% of equity is expected to change hands today. So the block base size is close to 4,935 crore, with the upsize option taking it almost up to 5,650 crore. The floor price of this particular block deal is at 1,785 rupees a share. Now, coming to Sterling and Wilson Renewable Energy, on December 6th, we had told you that a QIP is likely on the card, with the company looking to raise close to 1,500 crore in order to pare its debt down quite significantly. Along expected lines, the company yesterday launched a 1,500 crore QIP, and what the company will be doing with this particular fundraise will be looking to pare down the debt. The indicative issue price for this particular QIP issue is 347 rupees a share, significant discount to yesterday's closing price, but as per the SEBI rule formula. And after that, the total dilution, is close to 18.5% of the total share equity. So both of these stocks will remain in focus today.
All right, very helpful there. Thanks a lot. Upasana is also joining in. Dixon Tech has some positive news going for it. RVNL is also in focus. Upasana, over to you.
Well, first up is Dixon Technologies. Paget Electronics, the wholly owned subsidiary of the company, has been awarded manufacturing contract by Lenovo. Well, the contract awarded is for manufacturing of IT hardware for laptops and notebooks under PLI 2.0 scheme. Well, the company has said that the contract is subject to definitive agreement in due course. Well, next up is RVNL. RVNL in JV with URC Constructions has emerged as the lowest L1 bidder for several construction projects worth rupees 543 crores for Indore Metro Rail. Well, the timeline for the execution of this order is set at 1,092 days, is what the company has indicated.
Thanks a lot for that, Upasana. Well, let's wind this down. Then Abhishek joins us to tell us some more stocks that are in the news. Morning, Abhishek.
Q2 FY24 results for the new listed company Fedfina. Asset quality has largely remained stable. The disbursements are up almost 28% YOY and a decline of 1% sequentially. However, AUM growth is pretty robust at more than 37.5% YOY and about 6.3% quarter-on-quarter. The spreads have declined by 10 basis points quarter-on-quarter. NII growth is at 25% YOY and about 13% sequentially. The PAT is up 25% YOY and about 7.2% on a sequential sequential basis. Now, J&K Bank, they have launched a QIP of 750 crore. We do have access to the term sheet. Indicative price is about 107.6 per share. Now, this is at a discount of more than 14% to yesterday's closing price. Remember that yesterday in trade, it rallied by 9.5%, and to SEBI floor price, it's a discount of 4.5%. Equity dilution is about 6.8%, and bankers to this issue is SBI Cap, Motilal Oswal, MK and Elara. If at all they raise 750 crore, today via QIP, calculation shows that Tier 1 ratio would improve to 12.66% from 11.73%. Book value will increase by only 0.3%. Equity dilution of 6.8%, while net worth will increase by more than 7%. Spandana Spurti, they have given a presentation to the analyst and, on the exchanges, wherein they have laid out their 2028 vision, in which they say that disbursals in weekly will increase to 75 to 80% from 7% that they have right now. Now, MFI loan tenure, that will increase in the buckets of 18 months and 12 months and reduce in the 24 months tenure that they have. So, targeting more loans to existing borrowers, they'll form about 65 to 70% versus 44% that they form of the AUM right now. So, hope to have a new business share in the AUM to about 10 to 15% by 2028 from zero right now, and the marginal cost of borrowing that they intend to decrease to less than 11% from 12.3% that they recorded in Q2 FY24. Back to you.
All right, thanks a lot for that, Abhishek. Well, let's do a quick recap in case you missed out on any of the stocks with positive news flow. The Sun Pharma, Aster DM, Sterling and Wilson, Dixon Tech, RVNL, Fed Bank, FINA, J&K Bank and Spandana Spurti. While stocks with negative news flow, there's Infosys and Mankind Pharma. Well, let's also hop across to Hormuz this morning. He's going to give us a lowdown on all the brokerage notes that you need to focus on for the day. Hormuz, good morning.
Morning, Sonia. And I start off with a couple of FMCG notes. I start off with CLSA on ITC, where the company is holding its annual investor and analyst meet today. And CLSA is seeking answers to a few questions. First being that an update on the ITC next strategy, especially on R&D, supply chain and digital, the medium-term margin aspirations for the FMCG and others business, and the FMCG and cigarettes growth outlook, assuming that the consumption is normalized. And lastly, it is also seeking clarity on whether there is a timeline for the listing of its hotels business. CLSA has an outperform rating on ITC with a price target of 482. Goldman Sachs met the management of GCPL, and where it says that the launch of its new liquid detergent is promising. The recent acquisition of Raymond's consumer business that they did is also on track to deliver synergies. It is expecting the growth, however, to remain muted till the product efficacy improvement is addressed, and it is expecting the Indonesia business to deliver strongly after major changes. Now, Goldman Sachs has a buy rating on GCPL with a price target of 1185. And lastly, Bernstein on Aurobindo Pharma, where it also met the management, where it's foreseeing pricing environment in the US to remain favorable for at least the next year and a half, as the interest rates remain high. It is also expecting the PLI scheme benefits to start coming in from FY25. And beyond the short term, both the injectables and the biosimilars business are capable enough to support the business. It has a market perform rating on Aurobindo Pharma with a price target of 1004, which incidentally is the price at which the stock closed on Monday. Back to you.
Okay, all right. Thanks a lot for that, Hormuz. Well, Manisha standing by to wind this down then with all the updates coming in from the commodity space. Morning, Manisha.
Morning, Nigel. Thank you for that. Well, the US dollar has tested a multi-week highs in the early trading session, and the traders are now looking ahead to the Tuesdays, that is today's inflation figures, and the US Fed Reserve's last interest rate decision of the year comes in on Wednesday. Ahead of this, we've seen some profit taking come in across commodities. So the crude oil prices have seen a bit of a decline as well. The China crude import from Saudi Arabia has hit a 5-month low from the month of November, and then the street is also waiting for the OPEC monthly report that comes in on Wednesday. We have seen a sharp profit taking across metals as well. Gold is now firmly below $2,000 an ounce. Silver is down 8% from its highs of the month of December as well. Iron ore prices have come off its 1.5-year highs. And when you look at copper, that fell almost a percentage point. Aluminum and zinc also trading in the negative in Asia right now.
All right, Manisha, thanks very much for that. Let's, what's happening in the commodity space. We'll take a very quick commercial break here. Amnish Agarwal of Prabhudas Limited will be joining in for some fundamental stock analysis. Stay tuned. That conversation lined up next.
CNBC TV18, embarking on a quarter century of excellence. Embarking on a quarter century of excellence.
Welcome back. You're tuned into Bazaar Morning Call and hope you're having a good morning. Well, for starters, you have the gift nifty that's suggesting we open up well in the green. But we have listed down all the stocks for you, so let's get some fundamental analysis going. Abneesh Agarwal, Head of Research at Prabhudas Lilladhar, joins us on the show. Hi, Abneesh. Morning. Always good to see you in. Well, the gift nifty is suggesting we're going to open up in the green, but it won't be getting much support from the IT names because Infosys will be a bit of a drag owing to the, the rejig at the top with regard to their CFO moving on. What's your view on the stock? If Infosys pulls back, will you look at it as a buying opportunity?
Yeah, good morning. You see, the main thing is that whether you can say a CFO moving out or these are all, you can say, corporate actions and which have impact more like you can say a day or two unless and until it is something very big and structural. So I don't think that it is going to be structural, and IT stocks which have been underperforming, say, from quite some time, I think one should be accumulating them on any decline.
Okay. Amnish, hi, good morning and thanks for joining in. I wanted your thoughts in general about, the markets. How are you feeling at this point in time? And have you identified any stocks that one can buy despite the, the Nifty being at these levels?
Okay, good morning. The main thing is, you see, we continue to be very constructive on the markets. Now, as far as your these Nifty levels are concerned, I think we still need to look at that the small cap and mid cap indices are outperforming the large caps. And the large cap names, particularly, say, if you look at the indices, banks, they have been grossly, they have not actually made any big move over the last 6 to 12 months. The big, barring CITC, big consumer stocks are, you can say, there. Then your IT names, they have not gone anywhere. Reliance has not given any return. So practically more than, say, half of the Nifty, if you look at. So there is practically no return. And even then the markets are making new highs. So I think and fundamentally some of these sectors, particularly if you look at, say, banks have been doing well over the last, not now, maybe say last year or two. And the entire action there is currently concentrated more on the mid-cap PSU names. So I think if one looks at, say, the indices, if one looks at the large cap names, then the banks definitely, they have got many more legs to go over the, say, 6 to 12 months. But in general, I think the basic themes which are driving the market, they remain the same. The outlook over the next few months, that remains positive. RBI has also increased the GDP forecast. So I think one has to be very stock specific, that one doesn't go into the spaces where there is too much of froth. But I think overall doesn't seem to be in any sort of a danger zone or any sort of a bubble. And I believe that there will be ample opportunities here and there, both in the large caps and mid caps, where one can still put one's money on.
Amnish, hi, good morning. Prashant here. I think around the time of Diwali, you put out a note, and I think you had RR Kabil as one of the ideas in the mid-cap space. Just talk to us about that. I mean, we put out a piece, Nigel did a piece yesterday, how Polycab is now the most valued wire and cable company. It's kind of displaced Havells from the throne. It occupied for so long. But RR Kabil is a large player in Maharashtra. And how is it placed relative to some of the others out there, and valuation-wise, how is it looking?
If you look at, say, first about the Polycab has been a very, you can say, classic stock. Maybe I think 2.5 years back when we initiated, it was just around 1,000 rupees. Now, Polycab has the advantage that it is more or less a pan-India player, strong both in the B2C as well as in the B2B segment, although their success in the FMEG business has been relatively, I would say, limited so far. Now, Polycab, because of the strong demand from the industrial segment, has shown very good numbers, and the market has also re-rated practically all the wire and cable stocks. But having said that, RR Cable now, it's a relatively new company which has got listed, say, 3 months back. Now, advantage RR Cable has got is that the proportion of B2C for RR Cable is higher than any other company in the listed space. So that gives this company an advantage. The second aspect is that the margin profile of RR cable, where it is operating at say in a band of say 7 to 8%, that leaves a lot of room for expansion, maybe say over by 200 to 300 basis points over the next few years. And the third is the balance sheet is strong. The company has, I think they are going to spend say approximately 200 crores each on capex over the coming few years. So I think it seems to be a very sustainable story. The P multiples are lower than Polycab. I think on our estimates, the stock would be trading at say roughly around 32 times, 32, 33 times. And I think over the period of say 1 or 2 years, if one invests for medium-term horizon, I think RR Cable is a stock which should get re-rated over the coming 1 or 2 years.
All right, RR Cable, that's one of the big stocks in there. Abneesh, I wanted to ask you about these so-called tier 2, second rung in terms of the pecking order. Smaller banks, Bank of India, they came out with a QIP, massive demand. J&K Bank, you have a QIP as well, and we understand that there's very, very strong demand. What's your view on particularly, the frontline banks will do well, but in the near term, would you look at these tier 2 or, second rung banks, so to call it?
You see, banks always, if you look at, say, not now, but always the banks always move in, you can say, in a group. And now what is currently happening is that the balance sheets of PSU banks are better. Some of the advantages which private sector banks were having historically, so the kind of advantages they have come down both in terms of technology, in terms of balance sheet and all. And some of these PSU banks are also now growing, although their growth rates are lesser than the private sector banks. Now, as we stand today, the gap between the price to book, although the price to book of all the private sector banks has shrunk considerably over the last couple of years, but still they would be trading at say anywhere between 80 to 100% premium to the public sector banks. And when the going is good, their balance sheets are also good. And I think that is the reason why all the public sector banks, they have been doing well. Earlier it was, you can say SBI, Bob, and now you can say the entire second rung banks have also come into play. So I think they will always continue to trade at a discount. When the going is good, the discount may narrow down. So maybe they can, you can say an SBI may go to say 1.3, 1.4, or some of these banks may go to say at maximum say 1 time book. Some of them are trading at 0.5, 0.6 times book as of now. So I think once the rally in these gets, gets further prolonged and they move up, I think after that we will see again re-rating coming for the private sector banks. So till the time some of these banks with good balance sheets, reasonable growth rates, they are available at 0.5, 0.6, 0.7. I think the market will continue to rally some of these stocks.
Okay. Amnish, I wanted your thoughts on Trent because Motilal Oswal has released a very interesting report this morning. They talk about how all their brands are picking up now, right? Whether it's Star Bazaar, whether it's Zudio, Westside, and of course Zudio has done very well for itself in that price point. Do you think this is a multi-year opportunity and investors who've not participated, perhaps, do you think there's more to go here?
What Trent has actually done is that it has been able to create a very strong niche in the mass segment of apparel retail. Now, if you look at the apparel retail, particularly the mass end, then you are having players like, for example, Zudio is one, and then Reliance Trends is another, and many of the, you can say, the traditional departmental store companies, whether these are the likes of Shoppers Stop or Lifestyle or even Pantaloons, they have not been able to grow the way these other two, you can say, other two brands have been able to grow. Now, looking at Trent in particular, I think their Westside as well as Zudio, they are doing well. Zudio particularly has been a very, very interesting story where it has been expanding very fast. The throughput is coming, and the way it has been able to garner the, you can say, the throughput as well as sales from the emerging generation of the, you can say, Generation Z. So that is a very interesting story. So I don't have an exact hang on how the numbers pan out, but definitely Trent, the way it is growing, if it sustains the growth and the momentum, I think this is a stock to watch out for the coming, say, 1 or 2 years.
I mean, and that's a important one. We get lots of questions around this one because it's done so well, and people who owned it kind of sometimes wonder whether they should book some profits and move it to something else. Valuations, of course, etc. Very rich here, but the business, Zudio especially, as you said, has done very well. Amnish, stay with us. We've got more questions for you, but we have to take a quick commercial break here, so we'll do that. We also will have Anu joining in with how he's looking at markets, the trade setup. Our technical experts will come in as well after that. Stay with us.
CNBC TV18, embarking on a quarter century of excellence. Embarking on a quarter century of excellence.
Okay, welcome back. We got, 15 minutes to go for the pre-open session. Anuj is standing by with how he's looking at the markets. Anuj, morning.
Morning, Prashant. And of course, a lot of news points. Today is the Fin Nifty expiry. And I think it's all about the macro data over the next couple of days because you have the India inflation data and the US inflation data. You know, when the market gets good thing going for it, it normally keeps getting good news. So there's a possibility that going by the recent evidence that even this inflation number surprises on the positive, which is it comes perhaps slightly lower than what the street is anticipating, especially in case of US and even in case of India, maybe we'll be expecting 6%. And of course, that would be the base then for the next FOMC meet, especially the US inflation data. So there's a chance that, you know, the market will try to factor in some positives over the next couple of days. Coming to the levels then on the Nifty, there's one minor resistance. We're likely to open there at 21,167. That's the level I mentioned yesterday also, based on the weekly options. And the bigger resistance is at 21,500 after that straight away. And that's based on the monthly options. The support of, obviously, the first support is 29.23, which is yesterday's low. And the bigger support, 28.50, which was the low for Wednesday, Thursday, and Friday, 3-day running around the same level. On the Bank Nifty, my sense is there's some more catch-up which is still left for the Bank Nifty to play. It's done some of that this month, but some more is left. And the first support is at 47,186, which is yesterday's low. And the bigger support is 46,800. But my sense is that a move towards 50,000 on Bank Nifty has started. It will have some corrections in between, but looks like it's headed there.
Okay, a move towards 50,000 on the Bank Nifty. That's a big milestone. Anuj, thanks a lot for that. That's, I think, one piece of the market that needs to perform for the market to get above, convincingly above the 21,000 mark. But let's pose this question to Mitesh Thakkar and Sudarshan Sukhani, who join in now. Gentlemen, morning to both of you. Sudarshan, how are you feeling about the banks, particularly the PSU bank index is at a record high? Do you think it could build on to its gains? And what about the Nifty then?
Yeah, good morning. I think the Bank Nifty should build on its gains. That's mainly because the entire market is in a very strong, upbeat position. And the Bank Nifty, as Anuj said, is playing catch-up. We will have minor dips in between, but I would expect higher levels to come. And the same applies to the Nifty. Also remember that December is usually a seasonally fairly bullish month. So everything is going well. Be prepared for sudden and sharp dips, and these are buying opportunities. Look for higher levels eventually.
Okay, got it. Look for higher levels eventually. Thanks a lot for that, Sudarshan. Mitesh, coming across to you, how would you approach trade? We're facing some kind of resistance, I think, once we get past the 21,000 odd. But your view?
Morning. So I think, very clearly, this is a market which is trending on the upside. And last couple of days, as you were highlighting a resistance, I think it's more of a consolidation happening at higher levels. The idea is that I think, the markets, after having strong gains in the last week, I think it's going through a phase wherein it might just chop around a bit, settle down at higher levels, and then continue up. So I think that's a positive setup. I wouldn't be really worried about this and maintain a long bias over here. And I think, once we see this consolidation is over, we should see higher levels. Now, what can happen is that within this consolidation, you might get chances to buy at lower levels. That's a very welcome chance to add on to long positions, and that's the way we'll approach it. So maintain a long bias, use dips to buy into if you don't have positions or if you want to add on to your positions. Otherwise, maintain long positions with trading stop losses.
Got that. Gentlemen, morning. What are your ideas in terms of specific trades, Mitesh?
Yeah. Morning, Prashant. I have all buy calls today. From the banking side, it's ICICI Bank, which features with a stop at 1,005, buy for targets of 1,042. ACC is a buy with a stop at 2148 for targets of 2250. Coromandel Fertilizers is a buy. Keep a stop at 1220. Look for targets of 1300. And Godrej Consumer is the final buy call, which I would recommend buying with a stop below 1027 for a target of around 1080.
Sudarshan, morning. What about you? What are your trades?
Yeah, good morning. Well, Bajaj Auto is a buying opportunity. It's in a consolidation. Look for a breakout. Buy with a stop under 6,010. Bharat Forge was a buy given yesterday that is on the verge of breaking out. Luckily, it did break out, but that breakout is likely to see follow through. So it's again a buying opportunity with a stop under 1175. Trend which rarely comes, but the charts show us that from 1900 it's rallied to 2800. It's in a consolidation, so some higher levels are possible. Buy with a stop under 2830. And finally, that remarkable stock TVS Motors, again after a rally, a small consolidation, expect a breakout. Buy with a stop under 1900.
Okay, all right. Thanks a lot for that, Sudarshan. Well, let's get in some derivative strategies. Then we have Manoj Muralidharan, Vice President Derivatives at Religare Broking, who joins us on the show. Hi, Manoj. Morning. Good to see you in. Well, how do you approach this market? What are the trades, both on the index as well as individual stocks?
Good morning, Nigel. Nigel, when we started this series of December, we had seen the positioning in the bank Nifty was better than that in the Nifty. And needless to say, I guess it is just an 8 days before that we saw this outperformance going on rather. Now, if you see positional, the money which comes from the strong hand, which you call as institution, that does not really come in a direct form. You see an arbitrage which is going on. And in this case, it is a fresh arbitrage. It's a typical trade is when you buy in the fixed asset, which is your cash position. And there is some hedge which goes on in the derivative side, which is your stock futures or your index futures. Now, if we talk about Bank Nifty, almost 47,300, and we are at a ratio of 2.24 if you simply divide both the indices, your Nifty and Bank Nifty. So yes, there is some more outperformance. The Nifty might face some resistance closer to 21,200 to 300. The reason why I'm saying is this is since last almost 18 months to 20 months. If you see the intra-month position in the Nifty future, that does not really exceed a 1.3 crores. So what it says is the amount of derivative position in the entire market has a relevance to the Nifty future position that any contract has. So maybe a 200-300 more points and the Nifty might get into a consolidation. 20,700 and 21,300, that's the range that we expect the Nifty might be. The Bank Nifty might certainly face resistance closer to 48,000 as a spot. Stock specific, we like Power Grid. The stock is in good cash positioning as well. So we expect the stock to go to 248. We recommend buying it close to 230. The stop loss should be 218. The second is Bandhan Bank also is exceptionally well positioned for the December series, and we expect that the stock might touch at 268 to 69, at least in the short term, with a stop loss of 224. We recommended buying closer to 238 as a current market price.
All right, Manoj, we'll leave it there. Thanks very much for joining us with those views on the indices and, of course, trades as well. We'll take a quick commercial break here. The pre-open is about 8 minutes away. We'll also be joined by the management of Kolte Patil Developers, and we put the focus on demand trends and how well they're holding up in just a bit from now. Stay with us.
CNBC-TV18, embarking on a quarter century of excellence.
Powered by
CNBC-TV18, embarking on a quarter century of excellence.
Okay, welcome back. 5 minutes away from the pre-open session. Amnish Agarwal is still with us. Amnish, thanks for waiting. Just a few more names I wanted to get your reaction because there is so much happening in the market, right? IREDA, is this a classic case of a bit of a euphoria in the market? I think now stocks trading at about 3 times FY25, price to book. Almost there. Limit up 20%. You can kind of draw a straight line to what REC and PFC has done, but this one is more focused on renewables per se. So your thoughts there. And then I just wanted to get a quick word in on GMR Infrastructure, which has done very well over the last 2 days. Go on.
Okay, see, when it comes to your IREDA, this is a classic case when the market is chasing the companies which are focused on the new energy or the renewables. Now, this company is into funding of only renewables, and that's why it, you can say, qualifies to get maybe a higher P multiple or higher price to book value. Now, price to book value of 3, if you compare, for example, it can grow definitely higher, but today, even in the, you can say, the entire NBFC space, you will not find many companies, maybe say a Bajaj Finance or you can say Chola, who are trading at high multiples. All the banks, they are trading at sub 3. So I think this company is actually, it is just the rush to buy something, buy a stock which is into the funding of the renewables, and that is why there is so much of excitement and the stock is moving up. And usually we have seen that when there are certain themes which are being chased, then before the stocks, you can say reacts, or you can say reaches or stabilizes, one can't rule out the euphoria, and that is exactly what is happening with IREDA. So it is purely based on, you can say the market hunt for something which is catering to the renewable or the new energy segment. Now, when it comes
Just 1 minute. If you release a report today on IREDA, would you put a hold, a buy, or a sell? I mean, just hypothetical. With what they
very difficult to say, but in general, I'm not a very big fan of buying, you can say, any financial at a very high price to book value.
Okay, got it. GMR Infra, Amnish.
You see, GMR Infra, if you look at the entire aviation space, you look at, say, what is happening in Indigo, what is happening in SpiceJet, or for that matter, the way, you see, India is coming of age. Today, someone asked me that what is happening on the consumption side. You look at, say, even the normal staples are not selling, but you look at the discretionaries, you look what is happening on the aviation. Okay, the way you can say, you will find most of the time, you can say the flights are going packed. The more and more tier 2, tier 3 cities they are getting, you can say the airports are being built. So I think aviation sector has come of age. And that is, I think, going to help, you can say, companies like GMR significantly. Because there are, I think it's more like a consolidated market, both on the private space with 2 or 3 players now who are controlling it. And the way the growth looks for India over the next 5 to 10 years, I think the entire aviation space and all the ecosystem around it looks quite exciting, and GMR will definitely be a beneficiary of this.
Okay, so that's on the aviation space. I wanted your thoughts on some of these rate sensitives, right? We spoke about banks, but the other space that has been doing very well is real estate. And we're going to talk to a real estate player now. But in the anticipation of more rate cuts, perhaps in the second half of the new calendar year, would you buy or increase your allocation to any of the real estate stocks?
Because see, real estate stocks have been doing really well, and this is despite the interest rates were moving up. Because I think there are 2 or 3 factors which are playing out over here. First of all, the real estate players, when it comes to the stock market, they are limited to, you can say, the developers. But in the tier 2, tier 3 cities also, there seems to be some sort of a momentum which is building up in real estate, and the prices actually, they have started moving up after a gap of several years. So that is one. Secondly, I believe that as the interest rates they soften up, we will see more demand coming for the, you can say, building flats, or the, you can say, the projects which are developed by, you can say, some of these real estate companies. But having said that, I think if the economy continues to do well, then the demand for, you can say, houses, both for, I would say, both for the second homes, as well as by the, you can say, by the new generation, because as against the earlier scenario, now the, you can say, the new generation, they want to build their homes when they're, say, much younger than what the earlier generation used to be. So I think real estate seems to be, I think, a very dependable story. And having said that, as a sector is coming from the downturn which lasted, say, many years, I think there could be many more legs to growth. I think for the next 2 to 3 years at least, the real estate sector as such should do well in terms of, say, the overall bookings, in terms of the revenues which they are able to book, and overall numbers.
All right, Amnish, I wanted to ask you about Mankind Pharma. No, that was one of the big listings that took place earlier this year. Now, there's news that could probably be a PE that will look to exit a particular quantity. Now, if that happens, it could possibly get included in the MSCI. It's already been included in the FTSE. But given the kind of run-up we have seen post-listing, what's your view on the stock?
We don't have a coverage on Mankind Pharma, but definitely I would say it's not a cheap stock. Okay, and ahead of, you can say, such kind of a stock, your dilutions or sale by the P, there could be some pressure coming in the stock intermittently. But definitely we don't have any firm rating on the stock as of now.
Okay, so from the pharma pack, what do you like?
You see, pharma pack, I think Cipla and Sun are the 2 stocks which looks to be very good in the large caps. I think the numbers have been good. These stocks have been gradually inching up. And now Cipla particularly, I think it is consolidating around these levels. It looks good. I think it should good, I would say decent 15-17% return over the coming, say, 12 months or so. In the mid-cap space, we have been very positive on JB, Torrent, as well as your Eris Pharma.
Okay, all right. Amnish, just stay on. We'll come back to you. The pre-opening rates are actually kicking in and very interesting moves coming in on individual stocks. IRDA continues to surge despite all that caution about valuations. IRDA is up 20% once again in pre-opening. We'll, of course, wait by for these rates to adjust. But for now, there's lots that's happening in the markets. Look at that move on IRDA. But let's talk about the real estate sector. Colte Patil Developers is the stock on our radar. In Q2, the company saw very strong growth in volumes and value. Although realizations witnessed a decline, the company has given a business development guidance of 8,000 crores for FY24. We have Rahul Talele, who's the Group Chief Executive Officer at Colte Patil Developers, who joins us now. Rahul, thanks a lot for joining us. You have guided for 8,000 crores in FY24. In the first half, you've done about 3,500 crores. Will you be able to achieve this mark by the end of FY24? And what's the pipeline looking like in Q3 and Q4?
Thanks for having me on your show. See, we are confident of achieving a strong BD targets in the coming few months. It is backed by a strong BD pipeline, which we are currently evaluating. So there are multiple projects being evaluated in Pune and Mumbai. So, and we are confident to, have a closure in next few months on this to achieve a, BD growth pipeline of 8,000 crores.
All right. Hi, Rahul. Good to hear that you're on target to hit that 8,000 crores odd. But what about your mix? I think in the first half of the year, we've seen higher launches coming in or higher contribution coming in from Pune. How do you see this mix shape up between Pune, Mumbai, southern part of India, Karnataka?
So we are aiming to have a 30% diversification by FY25. So having said that, currently most of our launches were concentrated in Pune because it came from our earlier closed projects or our historical land bank. And since we have closed in last 6 months, we have closed multiple projects in Mumbai, which are planned to get launched in next financial year. So from next financial year, certainly a contribution from Mumbai, non-Pune will be significant to the tune of 25 to 30%. And we are on track to have that kind of, diversification beyond Pune.
When you talk about diversification beyond Pune, any plans, major plans to get into the South Indian market? Of course, Bangalore has now become, there's oversupply over there. But what would your plans be down south?
See, we are confident. See, currently we have a presence into 60 to 70% of the market spread across India, being present in Pune, Mumbai, and Bangalore, and we'll continue to have a presence in these three geographies only. And beyond Pune, our primary focus as on date is Mumbai, and we are seeing lots of good opportunities in Mumbai, and we'll be trying to close those opportunities. And certainly we are, working out on a couple of value accretive deals in Bangalore. So no plans to enter any new geographies as of now.
All right. Rahul, hi, morning. So otherwise, I mean, demand conditions, etc., remain absolutely rock solid, right? No, that's what you told us the last time in November that you were with us. Nothing, no problem at all on the demand side.
No, not at all. See, we are getting a very good response in multiple of launches that we did in last 6 months, and we are expecting a similar kind of response in the launches lined up for the second half of this financial year. Having said that, our conversion ratio, the lead generation to conversion ratio is still constant, and we are confident of, in fact, our referral sales is going up every quarter on quarter. It is currently in the range of 15 to 18% of referral sales, which is very strong in terms of a brand equity. So we are, targeting a good sales numbers going forward as well.
Okay, all right. Rahul, just to clear the air, 30% diversification means 30% will come in from Mumbai and Bangalore together, or only from Mumbai?
That's correct. It's beyond Pune. I mean, Mumbai and Bangalore
beyond Pune.
together.
Got it. All right. And you were speaking about sales. The first half of the year, you've done around 1,330 crores. I think for the year, you were targeting 2,800 crores. So that appears to be on. Just a question on that front. And also for the next year, I think you were looking at a number of around 3,500 crores. Both those two numbers you're maintaining?
Yes. So we are confident of achieving a guidance for this year, as well as we are, we are confident of achieving a guidance for next year, considering a strong BD pipeline, as well as multiple, advanced stages of approvals that we are expecting in next few months.
Sure. Rahul, are you selling a lot of these newer projects at lower realizations? Because your realizations have fallen both year on year as well as quarter on quarter. What would the average be for the full year?
Sorry, I have some different observation over here. So if you see, our realization of a pre-sales number was in the range of 5,000 to 5,500 3-4 years back, and now it is close to 6,500 to 7,500. On a quarter you can see spikes and lows depending on which project is contributing more, but consistently there is a push for a better price realization across projects, and we have taken a almost 10 to 15 even 20% price rise in all our sustenance inventory. So there is a consistent price betterment across portfolio.
All right, and this price 10 to 15% price hike across portfolio.
Yes, that's correct.
This is recent, Rahul?
No, see, we are taking a judicious call quarter on quarter in order to have a right strike between the volumes and the APRs. So in last 6 quarters, we have taken this price rise of 10 to 15%. In couple of projects, even 20%.
All right, got it. Rahul, we'll leave it there. Thank you very much for your time. Great speaking with you as always, and getting a quick check on the pulse of what's happening in the real estate space. So no problems. Demand and looks super strong, and referral sales 15 to 18% shows, of course, as Rahul said, strength of the brand, which is starting to show through. 517 on Kolte Patil. Sudarshan and Mitesh are back with us. Sudarshan, what are your 9-10 calls?
Consider buying TVS Motor with a stop under 1900.
Mitesh, what about you?
I'll go with the long on ICICI Bank with a stop at 1005 for targets of 1042.
All right. Well, Infosys, by the way, in pre-opening is not too bad. It's down about 0.7%. So, yes, there's a bit of a sentiment hit, but that seems to be it. Mangalam joins in now to give us the Momentumizer stock of the day. Mangalam, what are you looking at?
Well, Dixon Tech, usually the stock which has a lot of momentum behind it once it starts moving on either side. And this time it has been up. Yesterday, the stock hit a fresh 52-week high with a 7% up move. And that's not all. In fact, this month itself, it's up around 16%. And this year, it's despite all the volatility, it's up around 63% itself. The traded volumes yesterday, they stood out nearly 2.5 times that we see on an average on this counter. And that's not all. Not only the traded volumes were high, even the delivery volumes. Yesterday was close to around 3.2 lakh shares. And the average this month has been around 1.5 lakh shares. If you look at it from the start of November, the average has been around 1 lakh shares itself. So yesterday's delivery volumes were close to 3 times average that we've seen, along with a 2.5 times jump in traded volumes too. The big reason is that the company making Lenovo laptops under the PLI 2.0 scheme. So let's see how this aids to their fundamentals. But as of now, a lot of momentum behind them.
All right. In fact, we will be joined by the management of Dixon Technologies at 10:15 a.m. later today. Saurabh Gupta, the CFO, will be with us, so do stay tuned in for that. The other stock that we're looking at this morning is Trent. A very interesting note from Motilal Oswal. Mangalam is here to give us the latest on that. Mangalam.
Interesting indeed, because Motilal Oswal met the management of Trent, and what they've said that, the big headline for me is that they do not want to be just a West Side Zudio business. They are evaluating all the other formats that can operate at scale as well, and a bunch of them that they have are Stars, Samo, as well as Utsa. And the retail platforms for Trent will sell only their own brands, so which will aid their margins going forward as well. The new platforms that the company plans to work on are working on 2 principles. The first one, there will be value category that will be a key player in terms of any new offering. And secondly, they will keep women as the center point of the product proposition. So that would mean better sales as well. And Motilal Oswal has assigned around 37 times EV to EBITDA to their standalone business, which is Westlight and Zudio. We have 2 times EV to sales to Star Bazaar, nearly 15 times EV to EBITDA for FY25 to their Zara business, and as a result of which they have a target price of 31.40. The stock has done a big move in the last 1 year or so, and before that too, but they still reiterate their buy call on the counter.
Need to visit a Zudio showroom, Mangalam. Is there one in Bombay?
There is one
right?
in Bombay. There wouldn't be one in the southern part of the city. There would be one where value offering is there, rentals are lower, but there is a lot of Zudio stores in tier 2, tier 3 towns. I visited a few. Incredible value proposition there.
Absolutely.
And keeping women as your target audience is great, because women are deal hunters. Yeah. At the end of the day, they're looking for good, attractive price points, and I think Zudio, Star Bazaar, Westside are a couple of these brands that are focusing on value proposition. But Reema's here to give us the latest on Infosys in case you missed out on it. Reema, over to you.
Thanks so much for that. So the Infosys CFO, Nilanjan Roy, has resigned. His last date with Infosys will be 31st March 2024. And they have elevated the Deputy CFO, Jayesh Sangrajka, who also handles the portfolio of M&A. Now, Morgan Stanley says this resignation has come in as a bit of a surprise, unexpected, though they do believe the transition is going to be fairly smooth. They're bullish on, Infosys overweight rating, target price 1,600 rupees. Just want to highlight that Infosys too has seen a spate of senior level exits, especially in the last 18 months. Just that list will come up for you on your screen. We've seen clearly 8 senior level exits, which includes 2 presidents who went on to become the CEO of Cognizant and Tech Mahindra, Mohit Joshi, and now the CFO has also stepped out. These resignations have picked up in Salil Parikh's second term. The first 4.5 years after he joined in January of 2018, we hardly had any resignations, just about 5 of the senior level ones. But now off late, attrition is picking up, and many of their senior leadership is moving on to become CEOs of smaller companies. So fertile ground, truly, for the making of the new CEOs. Back to you.
All right, thanks a lot for that. More on that later. But Subros is also going to be in focus. Remember, it was a big mover yesterday after the government decided to make AC cabins mandatory from October 2025. Now, Subros had an analyst meeting yesterday, and here are the key takeaways. The management is focused on increasing their market share in 2 segments, the passenger vehicle space and the AC segment to 45% from 42%, and they aim to increase their market share in the truck segment from 51% to 55% in the long term. They also say that their EBITDA margin targets are 10% for the shorter term and 12% in the longer term. And they say that this mandatory installation of ACs in the N2 and N3 CV segment will boost their margins and help improve their long-term revenues as well. They also talk about how they can outpace the industry by 2 to 3% on the back of product diversification that they're looking at and increasing their market share specifically in 2 segments, which is the SUV space, which is growing very fast, as well as the electric vehicle share. So the only integrated pure play manufacturing unit for air conditioners for passenger vehicles and commercial vehicles. So the street definitely likes that. Let's see how the stock does today. But the market is all set to open in less than a couple of seconds from now. Looks like it's going to be a decent opening, not as great as what the GIFT Nifty suggested, but either way, I think Infosys will be a bit of a drag on the market. Also, a couple of these OMCs like BPCL in focus. But on the upside, you'd have to say plenty of stocks, Fed, FINA, Bank, very strong disbursement growth coming in over there. You had Trent, which is in focus after Motilal Oswal's new note over there, and a couple of other stocks in focus as well. There you have it. First tick on the index, the Nifty holding firm above the 21,000 mark. The mid-cap index is having a better showing, actually 175 points in the green right now. Advanced decline ratio very strong at almost 2,000 stocks on the advancing side. Let's take it straight to the winners. You have Maruti Suzuki, which is topping the charts 0.5% higher. HDFC Life, Hindalco, Adani Enterprises, and M&M are a couple of other stocks that are trending in the green right now. Let's also take a look at some of these FMCG names. ITC is looking pretty good, 0.5% higher on ITC. And what's leading from the front on the downside? BPCL, ONGC, Infosys, L&T, Bharti Airtel, and Titan. These are a couple of names that are in the red as we speak. So don't lose sight of that. But the fall in Infosys is not too much, honestly. Yes. It's about a 1% cut. And we were talking about that as to how it could be used as a buying opportunity by long-term investors, considering IT is back on the buyer's radar. So now it's cutting its losses, less than a 1% cut. Would be interesting to see how that plays out. But all the action definitely is in the mid-cap space. Huge moves coming into names like Irida once again. So that's where the focus area is.
Well, that's right. So just one point on BPCL. It's actually gone ex-dividend. So 21 rupees is the dividend paid out there. Ex of that, actually, the stock is more or less flattish. That's about one of those frontline names in there. Stocks that are in focus and stocks that are running away. Irida, as Sonia mentioned, the top traded stock, that's flying away as we speak. Sterling and Wilson, well, the news break was confirmed that we had put out earlier. They've launched a QIP to raise closer on 1,500 crores. Demand appears to be pretty good. That stock, in fact, is up closer around 5%, locked in upper circuit. J&K Bank, the QIP was launched for 750 crores. Extremely strong response is what we've got. So that one, in fact, is up closer around 5%. Spandana Spurti, they had a meet yesterday, and they're expecting weekly disbursements to increase to 75 to 80% from around 7% by FY28. So that stock as well is doing well. BLS International, they bagged a new contract in Canada. So that one as well is up closer around 4%. Mankind Pharma, sources were indicating there's likely to be a seller today. Yes, the selling has come about because the block has happened on the screen. So that stock's down closer on 4.5%. But now we'll have to see how the global indices rejig. There could be some inflows owing to higher free float. So that's going to be an important one as well. For the time being, the stock down close to around 4.5%. Prashant.
Well, it's a flattish kind of start. So 18 points, 17, 18 points on the Nifty is what we have. And I think you've got the Nifty Bank, which isn't really doing very much. It's dithering about 0.25% higher, but nothing to complain. Momentum, of course, naturally does slow down a little bit, even as the market inches higher, continues to inch higher. We were talking about IREDA with Abnish earlier. It's just it's doubled basically from 50 rupees last month. It's now $100. As I said, at about almost 3 times F525 price to book on IREDA. That's a renewable story people want a piece of. IRFC is another one which is up about 3% from the PSU space, but different segment, of course. RVNL is up about 2%. So these railway stocks, they did well in trade yesterday, and I think that continues today. Dixon, by the way, has taken out the previous highs after almost a gap of 2 years or so. And it took it out, I think, day before yesterday with the recent move. It's traded above it. I mean, it's been a fantastic week so far for Dixon. And that's another 5% or so. As we said, we have the management joining us in a bit from now. Sterling and Wilson Solar, that has had a one-way move from 250 kind of levels. Stocks at about 450 on Sterling and Wilson. So there again, the QIP, but I mean, strong demand, etc. J&K Bank, we've already mentioned. BLS, which is the Visa Processing Company, that is about 5% higher, 310. Gandhar Oil had a decent listing. It was up 5% yesterday. It's following up with another 4% this morning. And I think we mentioned Fedfina, Spandana we mentioned. Inox Green is coming up with about a 5.5% pop. And you've got something like a GIC RE, which is coming up with about a 4% gain as well. So it's not a bad looking screen at all. On the downside, I think bulk of it we've already mentioned. Tube Investments, perhaps keep an eye, 3% lower. It's got volumes 37.72, and I think yesterday as well the stock was slightly under pressure. Dheeraj Agarwal is with us, Managing Director at Ambit Investment Managers. Dheeraj, good morning. Good to have you with us here. Thanks very much for your time as always. What after this spectacular move, Dheeraj, what are you telling clients one should do? Stay the course? I mean, one thing we've heard is many foreigners who perhaps were to come back next year, perhaps, prepone allocations with what has happened last week with election results, etc. Your thoughts?
Yeah, so I think at this point of time, looks like there could be some more upside because, one point to observe here is that almost every single risk that the market was focused on is pushed back to at least April or May. So, the general expectation is that the US will cut rates somewhere between March and May. So that risk is pushed out by 3-4 months. With the fantastic state election results for the current ruling central government, the entire political risk is pushed out to at least May of next year when the general elections happen. So barring corporate results season, which will start second week of January, there are no significant risks at this point. And partly because of the cool-off in the US bond yields, you've seen OFIs come back to the market.
All right, it's actually a very good screen. I mean, the Nifty Bank is up almost about 80 odd points right now. And we're building onto our gains, so lots to talk about in terms of individual names. Just want to get to some double-digit gainers as well. J&K Bank is now inching towards almost a 7% rally. Dixon Tech, of course, has been in focus, as we told you. And a couple of other names. Aster DM is up almost about 2 odd percent. And IRDA, of course, 3% higher. Dheeraj, thanks for joining in. Wanted your thoughts on how to approach IT now. We're seeing a spate of C-suite resignations, actually. We saw it with Wipro, now with Infosys. But a lot of people believe that this is par for the course, especially in a high-growth sector like IT. Your thoughts? Would you stay invested in such names despite these resignations?
Yeah, these resignations by itself should not change much in this sector. I think the bigger call in the IT sector at this point of time is how much US slows down next year. The jury is still out, whether it's soft landing, hard landing, or no slowdown at all. In fact, interestingly, one current view in the market is at loggerheads with each other because one expectation is that US will cut rates by more than 200 basis points next year, which is predicated on the fact that the US economy should slow down meaningfully. And if the US economy does not slow down meaningfully, I think the rate cuts will disappoint. So ITV was linked directly to how much slowdown we see in the US next year. FY24 is in the bag. There is some amount of mixed views about FY25 still in the market. We will have to just wait and see how the US economy does in the next 2 quarters.
Hi, Dheeraj. Good to see you. And as always, I think you have a long short fund, right? How are you positioned out there?
So we were very long till a few days ago. We are slightly long at this point of time, but still long biased. We reduced a little bit of our longs in the last few days, given the very strong rally. Not to say that the fund is changing the stance from bullish at this point. I see some more upside, as I mentioned at the start of this call.
Okay. All right. So, trimming a little bit of the long position, but still more long than short, in terms of that fund. Dheeraj, we have been talking about this. There's some of those big private sector banks out there. They are there. They're looking very juicy if you want to add to your portfolio as a portfolio stock. The names I'm talking about is Kotak Mahindra Bank and HDFC Bank, who have been relative underperformers. But those portfolio stocks, they're taking time to actually, perform in line with the market. Do you think 2024 is going to be a year where we see some of these heavyweights come to the party and, in fact, outpace the returns that you're seeing on the headline index? Because for the time being, the smaller banks, the banks in the broader markets have done much, much better.
I think that's a very highly likely scenario for 24. There's a lot of mean reversion and valuation correction in the mid second liners, etc., which has already taken place. Compare that to a lot of frontliners, not just in banking, but across many sectors. The stocks have consolidated for between 2 years, 1.5 years to 3 years, whereas the earnings have actually kept growing at the normal trend line pace, which basically means that valuations of number of these names are down 30 to 50%, depending on which name we are talking about. And at this point of time, looking very attractive. So I would certainly agree with this statement that in 24, there could be a shift in terms of the relative outperformance of the frontliners and large caps, including banks.
Okay, that's on banks. And we also talked about IT. So many other spaces, right, that are picking up. So I wanted to talk about them one by one. This whole renewable energy space has now suddenly become the hot topic. So all of these stocks, Inox Wind, Tata Power, the Adani Group stocks as well, IRIDA and green financing. But the run-up has been really sharp. Is there still more to go? Do you think this is a structural growth story, and would you put money to work here?
Structural growth story, yes. Whether I'll put my money to work here at the current valuations is a bit doubtful. So we saw that, and we have discussed on this channel a number of times, names like Zomato and Policy Bazaar in the past. If you recall, in the initial part, the stocks went vertically up, and then most of them actually corrected down 50 to 80%. And after that, they have started moving up again. So this always happens in any new sector. In the initial part of the sector optimism, markets just doesn't know how to value them. And the stocks tend to move and overshoot or discount multiple year of earnings or multiple year of performance in a very, very short time. And then it does a course correction. So I wouldn't chase these names here. As a business, it's a structural story, 100%. Renewables is here to stay and will keep on growing, but not at the current valuations in terms of stock prices, perhaps.
The other thing, Dheeraj, which I think there's more confidence in this team is Make in India, right? Import substitution, etc. So Dixon is the used to be the poster boy. Now, of course, you've got so many others which are listed, and they've all done well. But Dixon is back up, is taken on some important levels. I mean, highs of the last 2 years. There's this tie-up with Lenovo, which has now been announced. By the way, we'll be speaking with the management a little later. But what are your thoughts on Dixon, if you have a view here, or what you like the most in this space?
So again, this space has the same issues. The story is long-term and is structural, but at the same time, I difficult to wrap my head around valuations of a number of these names at this point of time. And once again, there could be a case of multiple years of earnings performance getting discounted today. The one pinch of salt I would mention on this entire space story at this point is that at some point of time, India will need to backward integrate into component manufacturing. At this point of time, margins in most of the EMS companies is broadly similar to the PLI benefits, which basically means that ex of PLI benefits, that the companies would still struggle to make profits. But it's the beginning of the story. Auto story started in a similar way. If you recall, when Maruti came to India, it was 90% Japanese components, and now it's 90% Indian components. So these things take time. It will play out. And again, they are in the momentum phase right now. I would just say that if one wants to chase momentum, fair enough. But if one wants to try to justify the valuations, it will be tough.
Dheeraj, in the past, we've spoken about Zomato. You're a fan of it?
At this point, I'm not too sure, but yeah, as a theme.
I mean, earlier, I think, Dheeraj, earlier on you were quite constructive on the stock. So you're saying it's run up a little ahead of itself?
Yeah, it's almost doubled in a very short span of time, right? So I think the business will continue to do very well in terms of timing. Entry and exit in the stock is a little bit of a fine-tuning matter.
All right. I wanted your thoughts also on the housing finance space because we, of course, going to talk about it now. But this is a space which is picking up a lot, right? Something like a PNB housing finance looking at AUM growth of around 17-18%. From an investor standpoint, does it make sense for you?
In fact, this is one segment of credit which has continuously grown at a very steady pace. So, if you look at the component of credit growth in the last year and a half, it's largely housing finance, consumer finance, unsecured consumer lending. And corporate lending is just about started to pick up in the last few months. The corporate lending has been slightly weak as compared to the other two segments in the past. So we are seeing buoyancy in the real estate sector and housing finance. That also, I think, is here to continue. Across real estate names, the projects are getting lapped up as soon as they are launched, especially in the premium segment. So this will continue to remain a high growth sector.
Dheeraj, your team at Ambit has initiated coverage on these capital market plays today, I think. There is CAMS and KFin. Just going to run us through, the ideas here?
I've actually moved on to the buy side within Ambit, so I'm not that plugged in. I'll have to call the analyst and take the presentation.
Call the analyst to add. Point taken. Thanks very much. Thank you very much, Dheeraj. We'll actually invite the analyst who's written those notes and kind of understand. But that's another space, right? Capital market intermediaries which have done phenomenally well. And again, a runway for growth seems to be pretty long out there. So that's Dheeraj with his perspective. The market, by the way, is up about 40 points. So it's good going, 21,030 or so. Sonia.
Okay, well, we were just talking to Dheeraj about one space, which is the housing finance space, which has been doing really well. So let's look at that. PNB Housing Finance is on our radar. The company in their conference call recently said that they maintain their FY24 guidance for spreads and the net interest margin, while for credit costs, they are guiding for 0.6% for FY24 and 0.4% from the next fiscal onwards. Girish Kosgi, the MD and CEO of PNB Housing Finance, joins us right here in the studio to discuss more on their business momentum. Mr. Kosgi, good morning, and thank you for being here, taking the time out and visiting our studios. Appreciate it. I want to understand, because the space is growing really fast, right? The affordable housing segment. And we were just talking to Kolte Patil. They were saying that demand across the board, across geographies, is looking very good. Are you confident of maintaining the growth? Earlier you had said that AUM growth will be about 17-18% year on year. For FY24, are you confident of doing that? And what are the early signs for FY25? What kind of reasonable growth would you be looking at?
Yeah, good morning. Thanks for having me here. So if you look at PNB Housing a year back, we used to show growth of, it was either flattish or it was negative. So from that stage, we have moved to a book growth on retail of about 12.5% in first half on a YOY. Now, I had guided a growth of about around 17%, right? I think we should see it more directionally. PNB as a company, we are in a transformational journey, right? And we all know what has happened in last 1 year, right? So there are three reasons why I feel that this industry will grow. Whether PNB will do 17, 17.5, 16.5 or 16, I think it's not a real matter of, I think it's not a real big concern, but as directionally, this industry is doing well.
Yeah.
Industry is doing well. There are three reasons. One, there is huge demand on the prime side, on affordable side. Number two, there is huge shortage in the housing units. Number three, there is huge support and push from government. And that's going to be a X factor in next 2-3 years' time. So all these three things put together, this industry has to grow.
Can you elaborate a little bit on what is the push from the government that you're getting at this point in time? And when you talk about the trend will continue, are you looking at a 20% plus growth for the industry over the next couple of years? What do you think the sustainable growth could be?
No, I think what was anticipated, let's say till about a quarter back was, industry will grow at about 12 to 13%. And government push on housing probably might take it up by another 1% or 2%. I think, but that is on the entire industry, right? The push is going to be so high that this industry has to grow. We always talk about 12 to 13%. We used to talk about 14% earlier. Now it is 12 to 13%. But PNB housing, this year, coming year, we will definitely grow at about 40 to 50% from the industry growth rate.
Okay. All right. Hi, good to see you, Mr. Kosky, and thanks so much for coming down. You know, affordable housing, I think you had mentioned this point that you'll be one of the first housing finance companies that hit that 1,000 crores odd in terms of exposure out there. Have you all hit that, or when do you all hit that mark, and how do you see this segment ramp up?
Oh, I think great. In last 11 months, we have built a book of 1,000 crores.
1,000. Affordable housing.
Affordable housing. We started this about a year back. We opened 100 branches.
Okay.
In 11 months, we have built a book of 1,000 crores.
Okay.
And obviously, the portfolio is very new. I think 1 plus DPD is 0, right? I think it's a very good book. Now, having said that, there's huge scope, there's huge opportunity in this space. So we will be pretty aggressive in this space.
Okay. So aggressive would be what? Could you put some numbers to it? Where do you see this going? And in under a year, you've already hit 1,000 crores. You know, how does the next 12, 18 months look?
See, affordable business, it's all about three things again. One, we need to open brick and mortar branches because not much of digital would work.
Got it.
Automation would work internally to try and streamline the process. From customer point of view, I think it is more of physical branches being present. And that is why we had opened 100 branches in last 1 year. We will open 60 more branches before March.
Okay.
Right.
Got it.
So one is we need to have physical branches. Number two, obviously we need to invest in people.
Right.
And number three, in this business, I think we need to manage the operational risk. I think that is the most critical part in affordable. As far as demand is concerned, demand is pretty good. It is, in fact, a notch better than prime.
Okay.
You know, Mr. Kosky, good morning. And thanks for coming in. Always great to chat face to face. You know, over the last 1 year or so, and we've done stories on this, etc., premium sales have been doing very well on housing, right? Affordable. Even if you take the number of units which are sold or the value of sales, etc. I mean, I'm not talking about PNB housing, but industry. It's been, premium has far outpaced the growth there. But many do point out that is simply because the inventory of affordable housing out there is not that large. I mean, people don't seem to be building that much. Builders are not really interested in building affordable housing. Everybody wants to do premium because you got to sell. You can sell 100 premium units and you make a lot of money, whereas you got to build 1,000 to make the same amount of money. So it's tougher in that sense as well. I just want to get your thoughts on that. Do you have to push builders to come up with projects and say, well, you know, we're ready to fund you, but you got to go into the affordable segment and do it?
I think this first sale from builders, that is a very small part in affordable. To a large extent, it is construction, self-construction, plot purchase and construction. These two would account to 40%. Resale would account to another 25%. Right? So when you move to prime, especially in, let's say, top 25 cities, I think bulk of the business would come in from developers, from apartments. Whereas on the affordable side, about 20-22% is from flats. And the rest is going to be independent houses, or it's going to be self-construction, or plot purchase and construction.
But so you're making my point in a way, Mr. Kosky, right? So flat apartments and builders making high rises, etc. And the affordable segment is about 20%, you said, right? First time.
I'm saying the composition of the book, if you see, it's about 22%.
Doesn't that need to grow? I mean, the real big scale and growth will come when that expands, right?
It has to grow, and it will grow. It takes time. And if you look at the ticket, it's obviously affordable. See, because, it also depends. See, affordable business was there 5 decades back, 4 decades back, 3 decades back. It's only since last 10 to 12 years, we have categorized to two segments, prime and affordable. Even 3 decades back, you had those affordable profiles who were being given loan of 10 lakhs, 15 lakhs, 20 lakhs. Maybe the pricing was same. Today, we differentiate the segment, we differentiate the market, we differentiate the pricing, and therefore the yields are different, profitability is different.
I want to talk about the corporate portfolio. You said you'll be back in that segment. What are you looking at in terms of a timeline? When do you hope to get back to corporate portfolio?
See, we had taken a call to run down the book and also work on NPA.
Yes.
Both we have done. Now the book is less than 2,400 crores as of last quarter end.
Okay.
And very soon we'll be restarting corporate. But that will be in a very small way.
Okay.
We will be focused on select developers, select projects in select cities.
Okay.
And small ticket size. So it's not going to be a big story for us.
Okay.
Corporate restart is going to be only to propel retail business. To that extent, we are committed. And at any given point in time, at its peak, corporate at a portfolio level is going to be less than 10%.
Less than 10%. Okay,
Yeah.
got it. So retail loan growth is your main focus area. What is the sustainable retail loan growth? You spoke about overall AUM growth of 17 to 18% for FY24. But in retail loan growth, what are you looking at?
I talked about retail only.
Yeah. Okay.
So I think for next 2 to 3 years' time, 17 to 18% is a good growth rate.
All right, Mr. Kowski, I want to understand the cost of funds. If you could tell us how have they changed, and also what is your mix currently? How much of it is from banks? I asked this because the RBI had come out with an announcement, a couple of weeks or so ago. So does that increase your cost of funds? If yes, by how much?
Obviously the rates start moving up till about 2 quarters back. Now it is more of a consolidation stage. And we are expecting rates to go down maybe after a few months. Maybe it will start with 25 bips and slowly it will catch up. Now our cost of funds also had increased and now it started dropping.
Okay.
So on portfolio, our cost of funds is 8%. Incremental is about 7.9%. And looking at the performance, we are also expecting an upgrade from rating agency that could further bring down the cost. And till last year, we were not eligible for funding from NHB.
Yes.
This year, we are eligible, which means the cost is going to further come down. So I think going forward, there will be improvement in cost. And if you look at the entire liability mix, 40% is from banks, 31% is from deposits, 10% is we have NCDs, ECB is about 10%, and the rest is from CP and others.
So from NHB, you'll be, you're eligible to borrow. So obviously that will come at a lower cost. Can you tell us how much lower can that be in comparison? Currently, you're borrowing at around 7.9 to around 8%. So how much lower will that be? Point number one. And what does this mean in terms of NIMs going ahead, margins going ahead?
So NHB blended both refinance and affordable, both put together. I think it should be, the difference should be little over 121-25 bips from the from the normal instruments, cost of funding perspective. In terms of NIMs and spread, I think we've always maintained that our NIM, for example, last quarter was 3.95 and spread was 2.6. I think we'll be able to maintain around that level. NIM will be between 3.5 to, let's say, 3.9, 3.95. And spread will be around 2.5, 2.6.
I just have one question on asset quality. Do you see further improvement in asset quality by the end of FY24?
Oh, definitely, yes.
Okay, what would the level look like?
If you look at last March, our overall GNPA was 8.13%. And as of last quarter, which is about 6 quarters, it is 1.78.
Yes.
Right now, in next 2 quarters, it will come down, but it will take some time. So I think another 3 to 4 quarters time, we should be one of the best and comparable with the other companies in the industry.
Mr. Kowski, CRISIL and ICRA had upgraded you, right?
They had changed the outlook.
Correct.
It was not an upgrade. They changed the outlook. The next is an upgrade.
Okay. And this NHB, you already started borrowing? Because last time you were on, you were saying...
we are in the process.
Okay. I mean, it's in the works. And you said the difference in cost of money from there is about 100, 125 basis
Generally, it's about 100 to 120 basis.
Okay.
All right. Mr. Kowski, appreciate your time here. And thank you so much. We got... a lot, not just about the industry, about your own company and the way forward as well. Looking forward to chat with you again sometime soon.
Thank you.
All right, that is the Managing Director and CEO of PNB Housing with more on the business momentum and the way forward. They're looking at a 17 to 18% growth in the business. That's something that they had guided for earlier as well. And they are very aggressive in this space, but they're looking at more brick and mortar branches. They're looking to open 60 more branches before the month of March. Let's slip into a quick break. As 2023 is about to end, we'll be focusing on stocks that have been the big winners of the year. Today, we'll speak with the management of NCC, Neeraj Sharma. The head strategy NCC will be with us on the other side. Stay tuned. Later in our special segment Charting Trends, Mitesh Thakkar will join in to decode the charts and the technical trends of the market.
CNBC-TV18, embarking on a quarter century of excellence. Co-present CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. Well, markets are pretty steady and the broader markets are outperforming yet again today. So it's time for our special offering, Big Winners of 2023, where we're focusing on stocks which have shown a stellar up move in this year. And investors obviously are very, very happy. But they would like to understand what's the outlook from here on. NCC is one such stock. It's up close to 90% in 2023. The company has received a couple of orders worth 550 crores in November itself. We have with us Mr. Sharma, the head strategy NCC, who joins us on the show. Hi, Mr. Sharma, morning, and thanks so much for joining in. First of all, your investors will be very, very happy because 2023 has been good in terms of a stock price movement. Let's understand a couple of fundamental aspects, though. You know, the order inflow from the road sector has been a little bit slower, but yet your overall order inflow has been good. So give us a couple of details. What is the updated number in terms of order inflow that we have seen? And also, as a percentage of your order book, could you tell us which are those orders which will be executed in the near term, that's under 3 years, and which are the orders that will be executed post those 3 years? Please go ahead, sir.
Yeah, very good morning. Firstly, I appreciate your commentary. And it is a matter of fact that, you know, we are sitting at the highest ever order book in the history of the company, which is 62,349 crore. And as we speak, you know, this is one of the best book to bill ratios that we have reported in the recent several quarters. So we are pretty confident, you know, at the order book. We are pretty confident about our ability to execute these orders. We have, you know, 7 verticals in our company, and the execution time of a project really depends on the kind of contract that we have signed with the clients. There are contracts which are required to be executed in about 18 months' time, and there are contracts which are also required to be executed in about, you know, 5 years, 6 years' time. So by and large, you know, if you insist, if you want to put a number, we are quite confident of turning over this order book in about, you know, 3 to 3.5 years. And we are pretty confident to achieve the 3 margin guidance that we have shared with the street. The first one, that was, you know, order inflow of 26,000 crore as we speak. You know, if you really take into account the announcements that we have made in last couple of months, we have already reported an inflow of about close to 21,000 crore, which is about 80% of the guidance that we have shared with the street. Yes. The second guidance that we have shared with the street is about 20% revenue growth. We have already reported a 35% revenue growth in the first 6 months of this fiscal. And we are quite hopeful of, you know, achieving this number as well, that is 20% revenue growth. The third number that we have shared with the street is about EBITDA margin upwards of 10%. So we are quite hopeful of hitting that number as well. So we are pretty confident. Everything appears to be in place, and our execution is, you know, going full steam. And we hope to hit all these numbers by end of this fiscal.
Okay, all right. So you're pretty much on track, Mr. Sharma, but I think the street is sensing that maybe you could outbeat these numbers as well. We'll have to see for FY24. My question to you is, you know, you'll end this year at close to around 18,000 crores of revenues with margins of around 10%. I think PAT margins will be around 4%. By when can you get to, say, 25,000 crores of revenues in a fiscal year? And also margin improvement from here on, what can it be? You know, 10% is what you've already guided for. You're going to achieve that for sure for this year. What are the levers you have to, you know, see this move a little bit higher from here on?
This fiscal or next year? About the next? Next year, we have not really, in a project business, the way we talk about the future is, once we close the financial year, we try to review all the projects. We are not really talking about couple of projects, 10, 15, 20, 30, we are talking about close to 150 to 200 odd projects. So, by end of the fiscal year, we try to evaluate, status of each of the projects and then try to work out a number that in the next 12 months, out of these, about 150 odd active projects, how much is the contribution that is possible from each of the projects? Then we talk about the number. So give us some time, maybe in April or May, I would be happy to come to your show and talk about what is the margin that we have in mind for the next fiscal.
Okay. Mr. Sharma, hi, good morning. Prashant here. So just two questions. One is, you said 35% growth in H1. So to meet 20%, you just need to grow 5-6% and you're there. So why not bump up the 20% number?
It is our considered, belief that one should not keep changing, the numbers quarter to quarter. The last year also we have reported a 35% growth. So better to, I think, it generates good visibility, good amount of, confidence, trust to all the market participants when we talk about a number and, hit that number, hopefully. This sends really a, a wrong signal to the market that every quarter, you're trying to revisit. This is not how we really work. We believe in talking about a target, and possibly surpassing that number, hopefully.
Okay, no, that's point taken. Although it'll give the wrong signal if you downgrade expectations, which is not the case. I mean, what I'm asking for you is to, as you've done, beat and raise, as they say, right? But anyway, point taken. You want to stick to what you've said. You'll, I mean, when the numbers come out, of course, it'll be better than what you've guided for. Just a quick question: has there been a loss in pace of order awards on the roadside, Mrs. Sharma, over the last 2 or 3 months? So, and is the, not just for you, but across the board, that's what, data from the Ministry of Roads and Highways, etc., indicates. So the focus perhaps is on existing order execution. New order awards, that pace has come off quite sharply. Go on, sir.
That's right. You're absolutely right. But fortunately or unfortunately, we have not been able to bag a lot of projects, from this vertical, that is roads. There has been a lot of new players who have really jumped in the fray, and it is to their credit that they have been able to corner sizable portion of the new awards. So though we continue to be continue to bid for the projects in this space, but we have not really been very successful in getting a lot of projects from this space.
Okay. Mr. Sharma, good morning. I have a couple of questions actually. I want to start first with the water portfolio, because CLSA has put out a note saying that your water portfolio is in a prime position to get a lot of central government orders, especially because of the Jal Jeevan mission. Can you talk about what the opportunity here is, and over the next 1 to 2 years, how could you benefit from it?
Absolutely, absolutely. See, this scheme was really launched. Give me a couple of, bear with me for a couple of minutes to give you a sense of this scheme. This scheme was really announced in the 2019. The name of the scheme is Har Ghar Jal. So it's a Jal Jeevan mission. What the scheme intends to do is to provide the potable water connection to all the households. When the scheme was launched in 2019, we had about 20 crore households in the country. Really, it was 19.53 crore households. Only 5 or 6 crore had the potable water connection. So the scheme intends to provide the household potable water connection to all the households. And this scheme is jointly funded by the central government as well as the state government. The outlay of this whole scheme is 3,60,000 crore. So it's a very, very handsome allocation of the resources by both the governments. And fortunately, we have been able to bag a lot of projects from this, this scheme. And we are already sitting at a very comfortable, order book from this scheme. And we continue to see award of a lot of new projects. Those schemes, Yeah, sure.
Can you give us the numbers, Mr. Sharma? What is the order book from this scheme currently? And as a percentage of your total order book, what is it now? How much can you grow it to?
It would be about 17 to 18% of our total order book.
Okay. And what is the value, the absolute value?
Absolute value would be about, about close to 19-20,000 crore.
20,000 crores just from this particular Jal Jeevan mission, is it?
All these schemes.
All the schemes.
In the Jal Jeevan mission, there are other bulk water supply schemes as well. You have to have the bulk water supply as well to supply household, potable water.
So this 20,000 crores, it's executable over what time period?
It depends, in the different schemes, the timelines are different. So it would be about, about 18 months to 2 years. There are projects which are required to be executed in 3 years as well.
And have you added this in your 20% growth guidance for the full year? I mean, is this a part of that?
Absolutely. Absolutely.
I just want to confirm that number, sir. Your total order book currently is around 63,000 crores. Out of that, you're saying around 20,000 crores is towards this water projects. Is that correct?
Our total order book is 62,349 crore, to be accurate.
Right. And how much is towards water?
Yeah, 19,000. Not only this scheme, as I shared with you.
All water projects.
In the water space, this is one scheme that intends to provide the potable water connection to the households. But you have to have the bulk water, available to supply these households. You have to have, the waste treatment plants. You have to have the STPs. So I'm talking about the combined number.
Got it. All right. What's the update on Sepcop case? That arbitration award came in favor of you in the past quarter. I think they had said around 280, 300 crores. But the initial receivable, I think, was around 600 crores. So what is the recent on that? What is the latest on that front?
We have received the award about 198 crore, which is due to us. But as I shared with you in the last conversation that we had, there is a window available to each party to file an appeal of 3 months' time.
Yes.
So we have still some time at our disposal. So we'll cross the bridge when we get to it.
Okay, but you haven't decided as of yet.
No. We have consulted, few legal firms. So once some informed opinion is available to us, then we will take a final call. What is it that we intend to do?
Okay.
Give us some time. Maybe.
Sure.
Yeah, sure. Maybe next about a month's time, we should be able to take a firm call. Then I would be happy to come and talk about this.
Got it. We'll be happy to host you again to get more clarity on that. You spoke about the Jal Jeevan mission and the huge opportunity. You said 20,000 crores is what you're looking at from there. Can you give us some of the other segments that you're present in? Smart metering, for example. What is your role at the moment? What's the opportunity there? And how is ground execution looking?
We have just bagged this order, about 3-4 months back. So for I'm trying to answer this question about the smart meters. Sure. We have bagged 3 projects from the smart meter about a couple of months back. 2 projects are from the state of Maharashtra. The value of the order would be about 5,755 crore. 1 project is from the state of Bihar, that is 2,324 crore. So if you take into account the total order value from these projects would be about 8,000 odd crore, 8,080 crore. But what we have done is we have only taken the EPC portion of the order book in our books as we speak. And we have to execute these 3 projects in about a decade's time. So we have time. In the first 20 months' time, we have to really procure and install all these meters, commission all these meters. Then the annuity payment from the client would start. Your second question was about the verticals that we have. So other than these 2 verticals, we have other 2 verticals, what we call buildings division. In buildings division, we construct all kinds of buildings, all kinds of stadia, sports complexes. We have one more big division we call transportation division, in which we do all the metro projects, all the elevated corridors, highways, these kind of projects. Then we have mining, irrigation, Electrical T&D I have already touched upon. So these are the 7 big divisions that we have in our company. And as we speak, we have a very diversified portfolio of projects. Okay. So we have almost, equal kind of exposure almost everywhere.
Okay. All right, Mr. Sharma. Well, we appreciate you joining in, giving us all of those details, taking us through your targets for this year and even post that. Thanks so much for joining in, Mr. Sharma, and wishing you a happy new year in case we don't speak before then. And we look forward to having a chat with you when exactly you can revise those guidance numbers or give us a further outlook for FY25. Well, for the time being, let's turn our attention to a special segment, Charting Trends. Mitesh Thakkar joins us to decode some of the charts as well as technical trends in the markets for us. Hi, Mitesh. Welcome back. Tell us, what is the top call that you have in terms of some of these charts?
Morning, Nigel. So these are basically, some medium to long-term ideas which I've identified recently. The broader market has done very well, and the first idea on my list is Century Ply. Comes with a disclaimer that it's a part of my portfolio. It's kind of broken out of an 18-month consolidation. So, that suggests that on the longer-term time frame, the stock is likely to make higher highs. You have good support from the momentum indicators. I would now look at targets of around 950 to 1,000 as the minimum, which offers you about 30-35% kind of an upside. And this is a good accumulated. It's rallied in the last few days. So you would want to accumulate it slowly. Buy part now, and if you get any dips to about levels of 720, 725, add more, and keep a stop below 670 here. And I think the stock has a high chance of heading towards 950 to about 1,000, and then we'll take it from there.
Okay, what else are you looking at apart from Century Ply? What are the stocks on your list?
Morning, Sonia. The next stock is again a part of my portfolio, which is IRCTC. See, this stock had a very good run till 2021 and a part of 2022, and then went into a deep correction. I think now there are signs that correction is over, and the stock can possibly head towards the highest monthly closing, which the stock did was about 833. So it should retest that, but then that doesn't give you a big target. The position of the indicator suggests that we should break beyond these earlier highs and then make new highs. So I'm looking at an extension target of around 1100. So that gives you roughly about 40% kind of an upside, and this can be bought at current levels. You can add more if you get a decline to about levels of 720, 710, and keep a stop below 660 here. And I'm looking at 1100 as the target for the next 12 to 15 months.
Mitesh, hi, morning. You like Rallis India?
Morning, Prashant. Yes, I think Rallis India for the last, if you look at the last 3-4 months of price data, the monthly highs were between 235 to 240. It was a strong monthly pivot, and this month, I think in December, we have seen the stock get past those levels of 235 to 240, and the indicators are now pointing upwards. So the long-term trend should now be considered on the upside. That gives me a target of around 320 to about 330 here, which was the earlier highs in 2021. That should be retested. We'll possibly then look at extensions. But even that, I think, gives you about 30% upsides, and this one can be accumulated with a stop below 235.
Okay, all right. What about Kesoram Industries? There was plenty of value out there fundamentally, but now post that deal, how's it looking at the charts?
Very strong, Nigel. I think the entire cement pack, if you look at the charts of ACC, Shree Cement, Ultratech Cement, looks good. And Kesoram, has been in an uptrend since July. What has happened for the month of December is that it's given a continuation pattern breakout, which is suggests that the rally which was done before this gap will be repeated on the upside. So typically that should give you targets in the range of about 210 to about 220, which approximates to about 40% upsides. And this is a buy with a stop below levels of 138.
All right. And finally, you have Info Edge, right, that you're looking at?
That's right. The stock made a high of around 7,300 in October 21, and then declined by about more than 50% to make a low of 3,500 in Feb 23. Now it seems to be getting into an uptrend again. So even if you take a simple 61.8% retracement on the longer term charts, that gives you a target of around 5,800 plus. So I think the stock is a good bet to buy with a stop below 45.
Mitesh, I'm not sure if you put out a call on Dixon. Dixon has taken out the earlier high from 2 years ago. Do you think it's got more here?
It's got a lot more, it seems, Prashant. That's right. I think, it had a big high in 2021 and 2022 beginning around the 5,700, 5,600 mark. Now that that's been taken out, I think I'm looking at a target of around 8,000 plus. So still much more to go. And in case you get a good decline back to about 6,200, 6,300, I would even want to buy this stock.
You know, just one more name, Gokuldas Exports. Again, it's been a big winner. But from the highs of about 1,020, it's come off very quickly. Last 6-7 days it's been weak and it's now down at about 890 or so. How would you look at this? Is it a buying opportunity or maybe a little lower?
Maybe a little lower, Prashant. I think the stock has done very well. You know, it rallied from 350 to about 1,000 plus levels. Now the first signs of, you know, some profit booking correction from overbought levels is likely on the medium to long term charts. I think you can see the stock retest the swing lows of 780, which it made in November. And around those levels, if we see good consolidation, I would again want to buy this stock.
All right. Thanks a lot for joining in and have a good day. Well, that is the word on the technicals. By the way, some news on Thermax about an order win. So just keep that on your radar. Let's talk about some more stocks on the move. Abhishek is focusing on J&K Bank, which is buzzing in trade. Remember, he highlighted this stock in top 10 as well. Abhishek, let's revisit this.
Well, J&K Bank has launched a QIP of about 750 crore and sources tell that there is strong demand over there. Indicative price is at around 107.6 per share, a discount of more than 14% to closing price and about 4.5% discount to SEBI's floor price as well. The equity dilution is about 6.8%. Now, this discount can be compared to the fact that yesterday in trade, the stock was up more than 9.5%. So, bankers to the issue are SBI Cash, Motilal Oswal, MK as well as Elara Capital. If you take into account the 750 crore of capital infusion, calculation shows that the tier 1 ratio could improve to 12.66% from 11.73% earlier. The book value can increase by 0.3% to about 103.5 per share. With equity dilution of 6.8%, the net worth will increase by 7%. Back to you.
All right, Abhishek, thanks very much for that. The J&K Bank stock's up 10% plus. Mankind Pharma is down though. Vivek talked about the stock as part of the top 10 list. Let's revisit this one. Vivek.
Well, you know, they're absolutely right. You know, morning we had highlighted that there would be a large block deal happening in the stock, and along expected lines, you know, a large block deal, almost 8% of equity has changed hands. We understand from our sources, you know, we had access to the term sheet for this particular block deal. So Chris Capital and Capital Group, you know, both of these firms have actually trimmed their stake quite significantly in Mankind Pharma. The total block size is well over 5,600 crore rupees. And now we understand that, you know, the block which has actually happened will increase the free float. So it'll be interesting to see how passive indices take note of this particular block deal and, you know, whether there is any increase in weightage or whether there is any incremental addition to any of the passive indices like FTSE as well as MSCI. That will be the key trigger going forward for Mankind Pharma.
All right, thanks a lot for that. That's on Mankind Pharma. Let's step into a quick break. On the other side, Manisha Gupta will put focus on the commodity space. Do stay tuned in.
CNBC-TV18, embarking on a quarter-century of excellence. CNBC-TV18, embarking on a quarter-century of excellence.
All right, shifting focus to the commodity markets. Manisha Gupta is joining in. Manisha, what's the one commodity that you're tracking today?
Well, can't keep your eyes off natural gas prices because it has seen a complete collapse in last couple of days there. Overnight yesterday, we saw 10% of a decline come in for the natural gas prices. I mean, you know, this has been a very volatile commodity. You've seen 140 of a low and then almost 700 of a high, and we've seen very sharp profit taking come in for this space. After 10% of a decline, 1.5% is what we're looking at in sense of opportunity buying because it has been oversold on the charts. This is what natural gas has done in the last 1 month, down by 28%. And when you look at the last 12 months, we are 64% in the negative for the natural gas prices there. It also is trading at a 6-month lows at this point in time. Well, there are projections of warm weather going forward, not too much of negative temperatures in the first half of December, and that is the projection for the third week of December as well, and that seems to be weighing pardon me, on the prices there. Also, when you look at the U.S. domestic gas production, that has been at a record highs. The U.S. inventories, when you look at that, are up by nearly 7.3% on an year-on-year basis and up 6.5% on a 5-year average as well. So we are looking at record high production, record exports, and also inventories, which are at a multi-year highs right now. Also, when you look at the Europe gas prices, well, that was the story last year. But with there as well, we are looking at, when you look at the prices, they are in a contango and rather backwardation. And the January prices are lower than what you are seeing in for the month of April. So that tells you that there is a discount running in prices right now and the demand is not so strong. Also, when we saw the Panama congestion happen, and there were concerns that a lot of gas tankers which are stuck within that could lead to some price hike. But that also seems to be, those orders rather, have been filled by third-party supplies. There is just so much natural gas aflush in the international markets right now, and is the reason you have seen that pressure coming in. There also are reports suggesting that this oversupply could actually continue until 2025 and beyond. So there's not much impetus for the prices to grow from here. Also, when you look at the China crude imports for the month of November, they have seen a decline from Saudi Arabia at a near 5-month lows. So markets are looking at weaker demand continuing from China. What the street will watch out for is the OPEC monthly report that comes in on Wednesday. You have US inflation data today, the US Fed tomorrow. So the next 24-48 hours, there is just so much data and reports coming in that will keep the prices quite choppy.
Okay, thanks a lot for that. Let's step into a quick break. On the other side, Saurabh Gupta of Dixon Technologies will join in to talk about a new contract. Its subsidiary Paget Electronics was awarded by Lenovo to make laptops and notebooks under the PLI 2.0 scheme. Stay tuned for that.
CNBC-TV18, embarking on a quarter-century of excellence.
Co-powered by
CNBC-TV18, embarking on a quarter-century of excellence.
Welcome back. Let's talk about the big story, the big corporate story, which, of course, the news came yesterday evening. Dixon Technologies, the stock had been rallying over the last couple of days, and for good reason. Dixon told the market that they've onboarded Lenovo, the global IT hardware giant, for making IT products under the PLI 2 scheme. What does this mean for the company? What are the future opportunities? Saurabh Gupta is Chief Financial Officer at Dixon. He's joining us right now to take some questions. Saurabh, good morning. Great to have you with us here, and congratulations on this tie-up. So tell us, I mean, what's the size, scope of this partnership? Are we only talking laptops? What is the total addressable market, according to you? What is Lenovo's share currently? Just the basics first.
Yeah, if you look at the total Indian market in terms of volumes, the IT hardware is around 20-odd million units. And Lenovo pretty much has a 19% market share, both in laptop, notebooks, as well as tablets. I think so it's a large opportunity for us, and we think we'll be able to capture a large opportunity of this pie. So I think so for next financial year, we are looking to capture at least 10 to 15% of their volume requirements for the Indian market. My sense is year on year that numbers will continue to grow.
So just to get those numbers right, I have a figure of about $12 billion, which is the total addressable market for in India, right? You're saying Lenovo has a 20% market share here. Is that correct? So that's about $2.5 billion.
Yeah. So 12 billion is the total market size in terms of value. And only out of that, 25% is already manufactured in India, primarily to meet the government requirements. So almost 9 billion worth of IT hardware products were imported into India. Now with this PLI and also some kind of a restriction put in this category, this will really be a big import substitution game. And Lenovo is the second largest player in the Indian market. They have a 19% market share. So we think overall, in the next couple of years, it can become a large opportunity. Next financial year, because we'll also take around 4 to 5 months to set up these facilities for them. And so next financial year, we are hoping that we should be able to capture around 10 to 15% of the volumes. So
what
they
does
sell around.
what does that translate into? Go on.
Yeah, so they sell around 3.8 million units in India. So 20 billion market, 19% market share, and 10 to 15% for us for next financial year. In value terms, it can be somewhere around 1,500 to 1,600 odd crores. And apart from that, we are already manufacturing for Acer. So Acer also has a 10% market share. So for us, I think so. These are the two large brands contributing almost 30% market share in Indian market. Yeah.
So Saurav, in terms of number of units for the coming year, that's FY25, you'll be looking at around 400,000 units?
Yeah, so broadly around so laptops and tablets put together, it will be somewhere around 0.5, 0.6 million. And in addition to that, there'll be some volumes for Acer as well, which we are currently manufacturing it.
Okay, 5 lakh to 6 lakh, got it.
Okay, so just to take that point forward, 1,500 to 1,600 crores in value terms from Lenovo alone. From Acer, what is it in value terms in the first year? And then in FY25, 26, what are you looking at? Both from Lenovo and from Acer?
So Sonia, I think so it can be of 1,800 to 2,000 crore opportunity for next year. And then potentially 25, 26, it can be a 4,500 crore opportunity and majorly led by Lenovo.
So 4,500 crore opportunity, both Lenovo and Acer put together, but majorly led by Lenovo.
Yeah, that's right.
And okay, got that. 4,500 crores total IT hardware kind of opportunity in FY26 probably, right?
In FY26.
Okay. What is the size of the opportunity? I mean, once you're able to kind of, where will this grow up to? What's the peak opportunity from both these, as you see it, both these tie-ups?
Yeah, so the addressable opportunity is $9 billion, and assuming that $9 billion is at a retail level, so at a manufacturing level, you give some kind of a discount to it. So in next 4 to 5 years, it can be an opportunity worth 9 to 10,000 crores for us. So we really want to capture a large opportunity of this pie. And clearly, if you look at the government policy framework, the government policy decisions are clearly aligned towards making sure that these laptops and tablets are manufactured in India. And over a period of time, India attains a scale and size, generates that operating leverage, and potentially over the next couple of years, hopefully these laptops and tablets can be exported out of India.
Got it. All right. Saurav, give us a few more details. First up, what will it be in terms of margins? Mobile phone margins is around 3% roughly as of the past quarter. So how do these margins compare with that? Point number one. And what is the total investment you'll be making as well to, the kind of numbers you're throwing up in terms of revenue potential is massive, but there'll be some investment, right? Quantify that.
Yeah, so what we have committed under the application, and recently we got an approval, we have committed an investment of 250 odd crores.
Yes.
And cumulative revenues of almost 48,000 crores over a period of 6 years starting next financial year. So these are the numbers that we're looking at.
And margins? Okay. How much better or will they be in line with the mobile division?
They should be in line, so broadly 2.8 to 3% kind of margins. But hopefully as the way the whole PLI scheme is structured, there is a commitment on backward integration. You get more incentive, the more backward integration you do. So my sense is over a period of next couple of years, if we are able to attain that operating leverage, get into some backward integration of say batteries, chargers, cabinets, display, I think so then there is a small potential for the margin expansion. But initially, I think so next couple of years, it will be broadly in the range of 2.8 to 3%.
Okay, so next couple of years, margins will be in 2.8 to 3%. On the revenue front, you had guided for 48,000 crores of revenue over the next 6 years, but that's really far out. So in the next couple of years, given that you have this huge $9 billion IT hardware addressable opportunity, what from this current, I think FY23, you ended with about 12,000 crores of revenues. Where will you end FY24? What are we looking at in terms of FY25 as well?
In terms of IT hardware, or you're talking about the overall?
The overall revenues.
Sonia, I would not like to give any number on any overall revenues, but clearly it will be a large number for us and basically led by mobile, where we have really got a lot of customers in the last 6 months. And my sense is in the next couple of years, IT hardware will become the second largest opportunity for us after mobiles. So clearly we are looking at a large growth and we will significantly outperforming the industry as well as our competitors in the next couple of years. So it'll be really a large growth.
Sure. Can you give us a number in terms of the smartphone business? You spoke about how you're in discussions with large global brands for the smartphones business, and a deal is expected to close by Q4 of this year. Can you just provide a little more color on that? What are we looking at in terms of the sizable opportunity?
So if you look at the total Indian market in terms of smartphones is around 150 odd million, and 70 million is the 2G and the feature phones basically. So combined, put together, now at Dixon, we have created a capacity of almost 85 million. So almost 1/3 of India's market kind of capacities we have created. And within that, I think so 30 million is a smartphone capacity and almost 55 million is a feature phones capacity. And hopefully by next financial year, we should be able to do almost 75 to 80% of our capacity that we have built. So clearly, mobile will be a large opportunity for us, and we have acquired some customers, for which ramp up and stabilization is happening right now, and some more customer acquisitions are in the pipeline, which will hopefully happen in Q4, and their execution will start somewhere in Q1 next financial year.
And when you utilize 75 to 80%, this will be a mix of both supply locally and exports as well.
So one of our anchor customers, we exports, and hopefully for other customers in the next 12, 15, 18 months, hopefully we should have some export orders from them as well.
Okay, just to go back to that Lenovo tie-up, will you get sort of knowledge sharing, a global kind of process know-how, etc.? I mean, does the agreement include that?
Yeah. So clearly, they will share those best practices on their know-how, technology, and clearly they have a way of working. So clearly, it will be a big learning for us. And that's how it has panned out in case of other verticals. So whether we had worked with Samsung or Xiaomi. So clearly there's a lot of learning which happens when you tie up with such a large player. And they're really looking at us as their extended arm. So clearly it's a big opportunity for us.
All right. Final couple of questions from my end then, Saurabh. Is there any exclusivity in this tie-up with Lenovo? Point number one. And also, when did we hear about Jio laptops?
So I don't know whether so as of now, they've selected us as the vendor. So my sense, it will be a combination of the imports, which will continue to happen for some more time. And they have selected us as the vendor for the manufacturing of laptops and tablets. I don't see whether they have selected anybody else. So I'm not sure about the exclusivity angle right now. Jio, as of now, we are not in any kind of a discussion with them.
Okay, all the best. Thanks a lot for joining in. And this is a huge opportunity, right? You spoke about a $9 billion IT hardware opportunity that's getting imported into India, and you're going to be a big beneficiary of that. All the best. The stock is up about 3% odd. With that, it is a wrap on Bazaar. Chartbusters will come up in just a bit. Stay tuned.
CNBC-TV18, embarking on a quarter century of excellence.